that need to be made, just like in any other endeavor in life. There are always sacrifices that you need to make in terms of time, in terms of social life, you name it. But it's an endeavor that's worth it in terms of building, you know, your financial analysis skills, portfolio management, and you know, ensuring that you're ethical in all that you do within the financial markets industry, because ethics is actually the foundation of our industry. I mean, trust. I mean, we have an industry built on trust. So the minute you don't have ethical practices among practitioners, then you erode trust. And so there will be no financial markets industry to talk about. Okay, so mine is just to encourage you. You know, I think if you're aspiring to join this industry, if you're aspiring to make a difference, the CFA charter would be a step in the right direction. And we also have an expanding industry. I mean, case in point, if you look at collective investment schemes, or CISs, I think if you look at where the growth was about 4 years ago, 5 years ago, and where it is right now, and where we project it to be, I think we project that in the next 5 to 6 years, collective investment schemes assets should be hitting between 25 to 30 trillion. Okay. Now, if you look at that, it essentially points to the fact that at some point we're going to need professionals like you guys to actually come in and manage those assets. Okay. So this is a growing industry, expanding rapidly. We also expect pension assets to climb, and they need experts like you to actually come in and manage them. Okay. So the opportunities will be there. Okay. And the most important thing is preparing beforehand for the opportunities that we expect to emerge later on in future. Okay. So the CFA charter, very important credential in terms of giving you that competence, giving you that respect. I think the minute you say that you're a charter holder, normally expectations rise. You're expected to know everything. You're expected to have solutions. Okay, so you get a lot of respect. You build the competencies, and you have ethics being entrenched in all your practices. Okay, so I would encourage you on that. I think with that, I would wish to bring my remarks to an end. Congratulate all of you, okay, because we're all winners. I mean, we're here. Okay, we're here, and the fact that we're here shows that we're all winners. Okay, but of course, at the end of it all, you need to have a first among equals. You're all equals, but you need a first among equals. Okay, so just to congratulate you for getting to this point, and wish you all the best. And I really hope that you get to learn something from all this. I think you've already learned. I mean, just preparing that research report in itself, I think has been a point for you to learn what a research report entails. You name it. Okay, and I hope you can take the learnings further. I hope you can skill up a lot more as you prepare for the future. So all the best. May the best team win. We're all winners. Okay, and at the end of it all, what we'll just have is a first among equals. Okay, I want to look at it that way. We'll just have a first among equals. You're all equally competent. Okay, you're all equally brilliant, but we just need a first among you guys. Okay, so all the best, and I wish you very fruitful presentations. Okay, and we hope to engage with you in future. We hope to provide opportunities for you in future, and usually one of the things that happens is that I've actually had internships, or we've offered internships to previous participants in the CFA Research Challenge. We've had some of them being absorbed into the market. So use this as a networking opportunity as well. Just try and do some networking. Speak to a few people here and there, and you never know, something good might come out of each of ours. And may the best team win. But you're all winners. Okay. All the best. Thank you.
Thank you very much, Dixon. A round of applause to him once more. So at this moment, would like to kindly request the teams to step out. You'll follow Derek over there. and then he would lead you to your hosting room. If you're not participating, you're free to stay back. Faculty advisors and mentors are also free to stay back. And I'll request that those that stay back move to this side of the room so that we can be able to utilize the screen over there, and then the judges can use this. Thank you very much.
Good morning. This is Team A. I'm Rogers together with Alan, Winfred, and Vanessa. According to our investment summary, we institute a buy recommendation of NMB PLC due to our 12-month target price of 12,166 TZ shillings from an upside of 5.33%. That's the format of our presentation. And according to the NMB history, it was incorporated in 1997 after the restructuring of National Bank of Commerce, privatization in 2005, and issuance of the IPO at DSE in 2008. From 2010 to 2020, expansion into corporate banking, small medium enterprise lending, and from 2020 to 2024, digital transformation. It is segmented into retail banking, wholesale banking, and treasury. Winfred, take us through business analysis.
Thank you, Rogers, for that brief introduction. I'll be taking you through NMB's business and industry analysis. For NMB's business, for the business analysis, we use two models to assess NMB. One, the business numbers, which helped us assess how NMB creates, delivers, and captures its value in order to understand its level of competitiveness. Two is the SOC analysis, as NMB terms it, where we're able to look at NMB's strengths, weaknesses, opportunities, and challenges within its operating environment. For NMB's business model canvas, we identified that NMB has a wide customer base, including SMEs and key sectors, and the value it offers them is financial inclusion and digitally driven services. NMB delivers its services through various channels, such as branches, ATMs, and various agents. It maintains its customer relationships by using a multi-channel engagement approach with over 200 branches spread across the country and its customer-centered service. Some of NMB's key activities include deposit mobilization, lending, as well as advisory services. And it partners with key regulators such as the Bank of Tanzania. It's able to achieve all this through its skilled employees, and its main revenue streams are interest and non-interest income, and its cost structure is mostly made up of salaries and staff allowances. For NMB's SWOT analysis, we identified that NMB's major strength lies in its strong asset base, which grew from 10.28 trillion in the year 2022 to 13.7 trillion in the year 2024, as well as its large agent network with over 200 branches spread across the country, over 50,000 agents, and 700 plus ATMs spread across the country. One of its weaknesses is its dependence on the Tanzanian market. However, it has gone ahead to include in its medium-term goals regional expansion. And NMB has the opportunity to engage in strategic collaboration with rising fintech companies, and one of the challenges it faces is cybersecurity threats. In conclusion of our business analysis, NMB has a strong competitive position and a competitive advantage, which is backed by its strong asset base and its digital innovation. I wanted to look at Tanzania's banking sector, which is made up of 34 commercial banks that are regulated by the Bank of Tanzania. And the sector experienced a huge shift from traditional banking to digital banking. Some of the key sector highlights in 2024 was the asset growth, decline in non-performing loans, and its overall increase in profitability. We wanted to look at the macro analysis of the sector. GDP is projected to increase by 0.1%, with a decline in inflation of 1.6%. Which creates a suitable environment for economic activities such as banking. Globally, banks benefited from the post-COVID economic recovery, which led to higher interest rates and ultimately increasing profitability for banks. For the industry analysis, we used two approaches, that is PESTEL and Porter's 5 forces. For the PESTEL, we used it to assess how external factors affect NMB's performance. And we realized with our PESTEL that technological and economic factors have the greatest impact on NMB's performance. And finally, we used Porter's 5 forces to assess NMB's competitiveness, where we realized that the threat of substitutes and competitive rivalry for NMB are really high. Vanessa, please take us through ESG.
Thank you, Winfred, for the analysis. NMB believes that its profitability does not come at the cost of the environmental. NMB has increased SDG 15. It has also supported renewable energy, SDG 7, clean water projects, SDG 6. The social aspect, NMB has constructed the Mukundichi Nursery School, donated over 139 computers to 25 schools, SDG 4. It has also renovated a maternity ward at Muhimbili National Hospital, supported 55 public health hospitals, SDG 3. It also launched the Jaziri Gender Board, SDG 5, Gender Equality, Governance. The NMB board is made up of 9 members, 4 being female and 5 being male. It also has a team of experienced and qualified workers with a diversified experience of over 20 years. SDG 16, the management is comprised of 15 executives under the leadership of Ms. Ruth Zaipuna. Yes, Rogers, take us through a financial analysis.
Average, and they had an upward trend from 2021 to 2024, providing a buffer for growth stability. Net interest and non-interest grew at an average of 23%, 16% and 23% per annum, respectively, indicating increased interest earnings and improved core banking operations over the years. Total revenue had an upward trend, leading to a similar trend in net profit and net profit margin from 2021 to 2024, indicating total revenue increase over the years by NMB. Non-performing loan ratio had a downward trend from 2021 to 2024, leading to a similar trend in impairment charges at an average rate of 8% per annum, indicating improving asset quality and better credit risk management over the years by NMB. Despite of the upward trend of the operating expenses, we realized a downward trend in the cost-to-income ratio from 2021 to 2024, indicating improving operation efficiency and stability by the management of NMB. Shareholders' value was created by an increase in the return on earnings from 21% in 2021 to 25% in 2024 due to an upside from the net profit. Liquidity realized that the leverage coverage ratio, liquidity coverage ratio, and net stable funding ratio were all above the industry average by 2024. Alan, take us through the valuations.
All right, thank you, Rogers. So for the valuation of NMB Bank, we used 3 complements. Residual income model, we were able to discount future expected residual incomes and add that with the book value to arrive at an intrinsic equity value. By dividing that by the shares outstanding, we're able to arrive at an implied share price of Tanzanian shillings 14,387. By comparing that to the market price, we're able to see that NMB is currently undervalued with an upside of 24.6%. Looking at the DDM model, the dividend discount model, we were able to discount the future expected dividends of NMB Bank to arrive at an implied share price of 10,688 shillings, concluding that NMB is overvalued with a downside of 7.5%. Finally, looking at the comparable companies analysis, we can compare to the market price and see that NMB is currently trading at a premium relative to its peers, with this implied share price being Tanzanian shillings 8,832. That just shows us that NMB has superior profitability and market leadership compared to its competitors. Finally, the weighted valuation gives us an implied share price of Tanzanian shillings 12,166, and when compared to the market price of Tanzanian shillings 11,550 as of February 9th, we can see that NMB is modestly undervalued with an upside of 5.33%. Vanessa, please take us to the risk analysis.
Thank you so much, Alan, for the analysis. NMB Bank has structured its risk management framework aligned with regulatory framework. We use the risk analysis matrix, the risk magnitude and risk frequency, and we came to a conclusion that cyber risk, operational risk, and market risk are the highest risks faced by NMB Bank. Alan, take us to the conclusion.
Thank you. So in conclusion, we recommend a buy decision based on the fact that NMB displays a strong financial resilience supported by the CAMOS framework, a competitive advantage, and meaningful ESG initiatives, all operating within a stable macroeconomic environment and coupled with an overall upside of 5.33%. Thank you.
Thank you for the presentation. It was a great one. I would like to know, as a Ugandan that's going to invest in a company that's in Nairobi, have you looked in terms of currency? And then also, we've just gone through an election, so of course, we have things that are going to affect us, and that's interest rates, inflation, and then also when you look at the FX, how competitive is it for me to invest in such a company?
Kindly repeat your question, sir.
As a Ugandan that would like to invest, have you looked at the currency? You could say depreciation, or how the currency is going to move. And then also, we've just gone, usually based on me, whenever we go into an election, there is that bit of interest rates going up, inflation. So as a layman, how would you encourage me to invest in your company? When you look at all the micros.
So when we looked at the macroeconomic analysis of NMB, we were able to see that they have been forecasting drops in inflation, first of all, and increments in the GDP. And why, personally, I would advise a Ugandan to invest in a Tanzanian company that's not even cross-listed yet, is because NMB has shown a strong financial resilience over the last 8 so years. Ever since it has been listed as an IPO, we have been seeing its growth, and the growth has not just slowed down. Even just from last month, the share price has increased in around 30% in just 1 month. So that's what I would advise a Ugandan.
To add on his submission, when you see the privatization of NMB, in 2008 it was listed on the IPO, on the DSE exchange. During that time, there was a financial global crisis, and you realize that due to the effects of the financial global crisis that affected the entire world, NMB was able to still be able to scale up due to its performance and keep on expanding throughout the downside that the macro global economy was facing, due to its performance, its management, and its financials. Thank you.
Okay.
And to slightly add on that, you spoke about a bit of political instability. In the year 2024, NMB, in the year 2024, post-elections in Tanzania, there was a bit of political instability, but regardless of that, NMB still managed to emerge with amazing financials. Their financials still had an upward trend. Yes.
Good morning. Thank you for your presentation. I have a couple of questions. The first one is, I've had NMB as a bank on its own, but how does NMB fare when you're comparing it to the banking industry in Tanzania? Is it the largest bank by assets, second largest bank? And how does it compare in terms of growth when you're comparing it to the overall industry? I'd also like to know, how does the NPL ratio and cost-to-income ratio for NMB fare when you're comparing it to the rest of the industry? That's the first question. The second question is on valuation, and maybe you'll go back to that slide on how you split. My question is, why the split? No, the last one, when you're combining that one. Was there a criteria for how you decided which valuation methodology gets what weight, and what was the criteria, if any? The third question, let me give all the questions at once so that you take them on. The third question is on the Tanzanian environment with the most recent election violence last year. As a foreign investor going into the Tanzanian market, how would such a situation impact me? Should I be worried about any post-election challenges that are happening in Tanzania currently? Are there any, first of all, or was that a short-lived event? The third one is on the modest upside. You've mentioned that there is, when you combine all the valuation methodologies, there is a modest upside of about 5.3%. Since it's quite modest, and I'm going into a foreign market as a Ugandan investor, would you still encourage me to invest? I'll take you back to the question Joseph had asked in regards to the currency. Because I'm going into another country as a Ugandan, and my upside is about 5.3%, it's quite modest. I'm also taking on currency risk. So considering the currency risk and the modest upside, should I still invest? Thank you.
Regarding your question number one, you are asking about how Tanzania competes within the industry, and is it the largest? So NMB Bank is second to CRDB Bank in terms of assets. However, NMB has the strongest physical and digital presence within Tanzania. And allow me to ask, what else was within
NPL ratio and cost to income ratio of NMB compared to the industry?
To add on what she has said, when you look at the Dar es Salaam Securities Exchange, currently the banking and investment index is one of the leading indexes on that stock, and it has been for over a period of time. I think this whole year I've followed it, and it has been performing better than all the other indexes, meaning that the banking industry in Tanzania is performing very well. Now, when you look at right now, it's 11,700.
So normally, when you're valuing a company, most people would commonly see the DCF model, but it has been excluded here because the DCF model relies especially on cash flows. And for a bank's financials, you can tell that cash flows are not a very easily determined thing. This is because deposits act as both a funding source and a way of main driver for this valuation. The residual income model measures to see whether main driver for this valuation. The residual income model measures to see whether NMB as a bank can create value for its shareholders beyond NMB as a bank can create value for its shareholders beyond its cost of equity. So by looking at that residual income model, we're able to see how much value can NMB actually create within itself. So that's why we attached it the highest weight. Following over to the dividend discount model, the dividend discount model is extremely important, especially for dividends, for dividend holders or for shareholders in the bank, because they want to see what is the worth of my dividend in this bank. How much should I actually be buying these shares at, depending on the dividends I can expect from them in the next 5 so years. So that's why we apply to it. Dividends usually depend on the dividend policy of a bank, and it's like growth models. So it's not always 100%, though currently for NNB it's been stable at a third of that's its dividend policy, a third. So we apply to it a weight of 30% because it is important to reflect its ability within the total valuation, but not as important as its internal metrics. So finally, for the CCA just prices what NMB as a bank should be priced as within the market. It looks at investor sentiment, it looks at the prices of its competitors and how they're performing. So we attached it to the smallest weight because this valuation model greatly depends on how the market is moving. A simple spike or in any direction in the market from any of its peers can greatly change this metric. So we apply to it the smallest weight just so we can see that the investor sentiment has been reflected within the valuation models. And just to top up on what Rogers has been saying, yes, the upside is extremely modest of 5%. But I would still recommend a buy in any case because even if you look at the Q4 financials for 2025, everything has been on an upward trend for NMB. The NPL has been on the lowest, and I think as of 2024, the NPL ratio for NMB was either the lowest in Tanzania or the second lowest followed by CRDB. So with all those strong metrics, I would just recommend for NMB.
In addition to what Alan has said, for the investor to not worry about the political environment of Tanzania, when you look at the financials of 2025, yes, we had a bit of the political instability due to the post-elections, but you're going to realize that even if there was a fluctuation, it was either by 1%, and when you realize its total assets increased, from they had an upward trend, and the loans also increased. They had an upward trend, and the good news is that the non-performing loan ratio rate had a decrease, meaning that despite of the fact that the loans increased, there was still a better asset quality improvement, and the fluctuation was limited. And when you compare the trend from 2021 to 2025, basing on the quarterly reports, you're going to still realize that the trend is still upward for best performing ratios and downward to ratios like cost to income ratio. Thank you so much.
Sorry to bring you back. I had forgotten you had asked about the currency rates within Tanzania, especially for a foreign investor. Now, as per what the Bank of Tanzania has been releasing in their press releases on their website and everything, they have set their CBR to be at 5.75%, I believe, for the rest of the half year. Now, that just shows us that the Bank of Tanzania is expecting to hold its currency steady relative to, let me say, other economies or other countries, because it would like to attract these kind of investors in the country. Plus, in the past years, we have seen rarely steep fluctuations within Tanzania's currency, so I don't believe that is a cause for error. Thank you.
Thank you very much. You made mention that one of the highest risks that you're still having is the risk on the cyber risk. I want to know how you're trying to cap that risk that can give an investor comfort that even when I have my deposit seated or my savings seated with the bank, I'm still safe. The comfort of that you'll give to the customers. And then two, how prepared is NBA Bank to some of these changes that time to time keep coming from the regulators? Talk about changes in the rates of lending, the treasury rates, the daily, the forex, and the rest. How prepared are they?
Okay, so about the cyber risk, the way NMB has been handling its cyber risk, it is through various tools. For example, the system limit. As my colleagues have been mentioning, that it has highly improved its technology. So NMB has set up different committees to manage the risks. So the system limit, however much a lot of employees are in the bank, but not everyone is given access to the information in the bank. Thank you.
Please, Winfred, go to the slide of capital adequacy. Well, to answer your question of how prepared NMB is, to answer your question on how prepared, the orange lines shows the required ratio by the Tanzanian banking industry, and the blue lines show the ratio that NMB was able to have from 2021 to 2024. We realized that the ratios of NMB for Tier 1 and total capital are not only above the industry average, but they had an upward trend, indicating that NMB is very secure for any buffers that would happen in the economy. Please go to slide of liquidity. And when you look at the liquidity of NMB by 2024, you realize that the published ratios in the Integrated Financial Report 2024, liquidity coverage ratio and net stable funding ratio, leverage ratio, those were the figures: 597%, 207%, and 13.4%. Industry average required ratio, 100%, 100%, 7%. You realize that still NMB was way high above the required ratio or the industry average. So an investor wouldn't have to worry about NMB meeting its minimum capital requirements or NMB failing to face any buffers in an economy in case of anything, because it has a stable liquidity, and it has a stable and strong capital base over the years. Thank you so much.
I'll ask about the ESG. Are there any risk factors on? And then also, when it comes to ESG factors, do you have any risk factors that would affect your recommendation?
Please move to the ESGs. Environment. Thank you. So environment, I want you to do environment and social, but first with environment. When you look at NMB, for the environment part of it, it has planted trees, renewable energy, and low carbon transition, and clean stoves. That targets, or that's better for an investor that looks for including the including the sustainability in their investment portfolio. Now, when you look at the socials, please go to the socials, you realize that NMB issued the Jazeri bond that was mainly focused on women empowerment and women-owned enterprises. You also realize that the Jamil bond issued by NMB, it was directed to investing in renewable energy and agriculture. So I would simply tell an investor that investing in NMB, the impact of NMB on the social aspect and the environmental aspect is positive. Why? It is promoting gender equality, it's promoting renewable energy, and it's also promoting financial inclusion for women-owned enterprises. Thank you.
Well, just an addition of what he has just said, you're asking if it won't cause any risks in ESG. So I apparently recommend that there are no risks in its investments because NMB is literally gaining from these activities. Because the more it launches out these activities, it creates more awareness and it wins favor in the public. It means that it will boost on the number of clients that it will get. So whatever that it takes out, it is at the same time gaining back. So there are no losses that NMB is making, and there are no risks, because literally seeing on the part of ESG, NMB has been able to win 10 awards global-wise. And looking at the Jazeri bond, it is the first gender bond. So literally, this will attract more investors instead of taking them away, because anyone would like to strategically invest their income in something that is progressing. Thank you.
In addition to what she has said, what you would consider as a risk on your side, whereby, let's say NMB is undergoing more expenses to do these social impacts. Why? Because they are non-profit. We consider it not as a non-risk. Why? Because indirectly NMB is validating itself and winning over the trust of the market, meaning it's retaining its customers and attracting more customers, putting it forward in business. Thank you so much.
Sorry, you had also spoken about the pipeline, right? The oil pipeline. Yeah, so looking at NMB investing in the oil pipeline, this is a very big move for NMB, because looking at oil, it is one of the assets that are overrated. So it investing and putting itself in the business of oil, I feel like it's a more gain for NMB instead of losing. Thank you.
In addition to what she has said, investing in the oil pipeline would be a very good gain for NMB. But the reason as why when you look at its investment, you see minimal in the oil pipeline. Why? Because NMB is a little bit focused on investing in activities that it is sure they are going to impact the environment positively. Unlike the oil pipeline as yet, because there are some circumstances are around it that we're not sure about investing in it. But it would be a gain for NMB as long as it's not affecting the environment or it's mitigated very well. Of course, it would. Thank you.
Good morning, everyone. So we are Team B, and we'll be introducing or explaining our equity analysis of National Microfinance Bank, and we're going to do this through the financial analysis, the investment analysis, and also the environmental, social, and governance factors. And since we all know NMB is one of the leading financial institutes in Tanzania, we also want to come up to an assessment and a final conclusion of where we're going to give you a well-supported conclusion and recommendation from our analysis.
So according to the valuations, we use two different valuation methods. We use the dividend discount module as well as the forward earnings valuation in order to derive a conclusion. So we also used historical data as well. So from the valuation methods that we got, according to the DDM, according to the DDM,
So I'll be helping my colleague Nadi. So what we used a lot of historical data for comparison, and we're going to discuss the future predictions that we made. So as far as we had found, we used the DDM model, which is the dividend discount model, and we predicted a share of 6,661 Tanzanian shillings for NMB's shares. So what we have here is basically telling us what the organizational strength of NMB, and we used a few valuation methods, which were asset-based valuation, where we had found matches the total equity of the bank. We use dividend discount models just to make a comparison of the previous years of how well the dividends received their shares. We also used relative valuation models, which were the earning per share, where we use price to earnings and price to book. So these all helped us to know that NMB isn't undervalued, and we would recommend people to come and buy the shares of NMB. So this is what we mainly focused on.
This slide reflects the financial performance of 2024. As we can see, revenue is rising at the rate of 16% year over year. Cost is rising at a slower rate than revenue at 13%. Profit before tax is 20%. Profit after tax is 19%, and balance sheet loans and advances and deposits are growing in double digits. Lending is concentrated in personal and agro loans segments. It shows a diversified portfolio. Total revenue growth is estimated to be 1.85 trillion Tanzanian shillings in 2025. It shows improved operating income and successful business expansion. Moving forward to profit after tax, it is estimated to be 760 to 770 billion in 2025. It shows that incremental revenues are being converted into profits at an increasing rate. Moving forward to cost to income ratio, it is estimated to be 36%, and revenues are growing faster as compared to operating expenses. NPL ratio, it is estimated to be 2.7% in 2025. It means those loans which are doubtful to be repaid. Moving forward to net loans and advances growth, it is estimated to be 9.7 to 9.8 trillion Tanzanian shillings. It shows strong credit growth. Lastly, customer deposits growth. Customer deposits growth is estimated to be 10.8 trillion Tanzanian shillings. It shows strong customer confidence and franchise strength.
So using the Porter's five forces analysis, I'm going to talk about why NMB is good in terms of competition in Tanzania. So there is a low threat of new entrants due to the regulations by the Central Bank of Tanzania, as well as the bargaining power of suppliers. And there's price-sensitive customers, and this shows the bargaining power of buyers. There is competitive rivalry and intense competition from major rivals like the CRDB and NBC. and as well as threat of substitutes, for example, the mobile money and fintechs, as well as the non-bank alternatives.
So NMB uses environmental, social, and governance factors because it follows the greenhouse protocols. So most of its emissions come from scope 3, which is basically the clients or the people that they lend to. So mostly these emissions come from business travels, like people that go abroad for meetings, or the employee commutes, and all of that. So NMB is working with the Sustainable Development Goals, where it uses renewable energy, transport, food security, sustainable water management, and energy efficiency. So according to this, on the balance sheet, the green loan portfolio was 333 billion Tanzanian shillings in 2024, and according to 2025, it was 360 billion Tanzanian shillings, and this adds up to 83% of the total allocation, which means they have their business operations are low in comparison to their scope 3. Moving on to social, they value their stakeholders. So over time, the customer bases have increased to 1.5 million over time. And having a net promoter score of 56 shows that their customers are loyal and they're satisfied with NMB's services. And they will highly recommend NMB to other people. Suppliers also, as of the future predicted, we have 290 billion amount paid to suppliers, which shows that the supply engagement is high. It has also increased its commitment operations socially, where 5.4 billion was allocated to corporate social initiatives, and employees are satisfied. Employee retention rate increased to 97% as we predicted, because NMB offers training, it offers employee relations which are very good, so employees want to continue working for the company. And they also have they've hired about 4,644 employees through talent, through backgrounds and all of this, which means that they are not gender biased or racist, so which means that they have a higher employee retention. Moving on to the governance part, they have a strong governance framework where they have clear accountability between the board and the committee. So the governance is strong, which means they handle their risk well. This all supports long-term sustainability. So all of this shows us that risk identification, definition of a risk appetite, and stress testing helps them get risk managed.
I'll be talking about the key investment risks that are faced by NMB. Risk investment are uncertainties that affect expecting returns. I'll start with market risk. They include interest rate risks, currency risk, liquidity risk, and capital risk. Moving forward to credit risk. So these are financial losses that are faced when a customer does not meet the agreed obligations to pay back to the bank. Regulatory risk. So these are changes in the financial and banking regulations. They include Basel reforms and IFRS updates. Moving on to fraud risks. These are criminal financial crimes and money laundering. They are increased in the coming years due to more of digital banking coming in ways. Thank you. Liquidity risk. This is the ability to meet short-term obligations. They can be managed or mitigated by using cash with banks of Tanzania, government securities, and bank placements. Moving forward to credit risk, I had already given a brief review in my previous slide about it, but this is like a risk at a borrower's default. It can be managed or mitigated by lending in limits, diversification, collateral requirements.
And this is a SWOT analysis of the NMB Bank. We'll start with the strength. The strengths include strong capital, liability, and sector stability. They also have improved loan quality. By their non-performing loans, NPL, the ratio declining by 3.5% by Q1 of 2025. Moving to the weaknesses, they have high market concentration, they have high lending rates and limited credit access. Opportunities include they have growth in fintech and mobile banking. They also have large unbanked population and regulatory support from the government. The threats that they have rising cybercrime risks and also weak capital activities ongoing.
So our recommendation is to buy the NMB shares, and this is supported by the strong earnings growth, efficient operations, low credit risk, high capital adequacy, and sustainable dividends. From the asset-based, earning-based, and dividend and market analysis, all aligned to indicate value creation and low downside risk. From everything that we have shared, as well as the valuation, we came to the conclusion that NMB is undervalued, and this is where our recommendation to buy the shares comes from. Yes, we are done.
Thank you for the presentation. So I have a couple of questions, but I'll start with the first one because I think I missed it. What is the price that you got when you did your valuation? Is it an upside? Is it a downside? I must have missed that.
Okay, so according to our research, we think it's, since we're supporting people to come and purchase NMB shares, it's a downside. I wouldn't personally want to pay all of that for a share, but comparing it to the previous share that we had seen, the price was around 4,282 Tanzanian shillings, which is a preferably great share. So I think it's a downside. I personally wouldn't want to purchase a share that wouldn't bring me a lot of profit. However, since NMB has had a very peculiar or has a very high standard of giving its dividend back to its shareholders, I would encourage people to buy it.
So you wouldn't buy it,
I
but you'd encourage people to buy it. It's a bit confusing, huh?
Yeah, it's a bit confusing. But for now, I'm on the downside because it's a bit expensive for people who would love to buy the shares. So it's a downside.
Okay, okay. So again, use a dividend discount model with relative valuation.
Back to your revenue growth projection, I didn't see it coming out, the assumptions that you used to arrive at that. Which assumptions did you base on?
Actually, we did a trend analysis on the previous years, starting from 2021 to 24. So we basically calculated the differences between the years and took an average and basically estimated the one for 2025.
Okay, maybe to still on that, currently there's a lot of changes going on in the banking sector. If you are to look at the banking sector 5 years ago, it's quite different from what is ongoing right now. as you were doing your trend in the historical performance, did you have that factored in? Because a case in point, you look at that previously, the rate of default in lending was not as high as it is right now. Two, the risk, talk about the cyber risk, wasn't so high. And those are some of the things, I don't know, did you look at it as you did your projection? Was it factored in?
Okay, so since when we were doing our analysis, we had focused on the first 5 years. So, okay, so cybersecurity, we looked at it for the 5 years that we were calculating as historical data. Before the 5 years, there might have been a reduction in the cyber risks and fraud risks. But as of now, since we know all of this has become AI, all of the work is done on the computers and all of that, so the risk increases. That's why when we were doing the analysis of the SWOT analysis, we considered it as a weakness. So for the previous, okay, as a threat. So for the previous 5 years, we hadn't looked at that, but we looked at the present 5 years. So for now, we know that cybersecurity falls under a threat.
I have a question on NMB in its position in the Tanzanian banking sector. What's its position when you're looking at assets? Also, what's its NPL ratio, comparing it to the banking industry in Tanzania? And what's the cost-to-income ratio of NMB, comparing it to the banking industry in Tanzania?
So NMB, as we know, it's one of the leading institutions, of course, so it has to be at the top. However, it does have its competition. We are the CRDP bank, we have Stanbic, is it? Okay, so NPL, looking at the NPL ratio, we had predicted a 2.7, which is a reduction in the NPL ratio. And as for last year, 2.9% was really good. So when we were doing our analysis, we saw that 2.7 is excellent, because now we know that the rapid loan expansion is lower, because now people are being able to pay their loans back on time, which means if it was at 4% at one point of their time, which means people were having a hard time paying their loans back. So right now, people easily can pay their loans back. Yeah, so NMB in general is quite a financial leading institution. So you can see that how its valuation, how investors want to come and invest their money, how employees really want to continue working. So the ESG factors also show us that the sustainability levels are good to go, which means people would generally come and be a part of NMB.
Would you be part of it?
Definitely. I would definitely love to be a part of NMB.
Right.
Why not? Because from what, okay, their employee retention percentage was about 97% that we predicted. So I had seen their training programs, and they offer study programs from certifications to masters, which is very nice. So you get trained along with working. You can also, you're satisfied working there, you're getting a good pay, you're getting empowered, you're happily, you want to be a part of this, you're getting trained. Around 308 employees were internally promoted, which is like a 84% internal promotion, which is a great thing.
Then I would ask, currently, why would you, if I came to you, why would you encourage me to invest in NMG, given the fact that I'm transferring my money to a different country, and there are many risk-free assets available? We all know that the government of Uganda is trying to come up with a unit trust, which is a little bit risk-free. So why would I go that side? Why would I take my money that side to another
Could
country?
you please repeat the first part of the question?
Okay, if you're to encourage me to take my money to a different country, given with all the factors that are involved when it comes to Kenyan shillings, and I have better investment avenues in the country. So if you're to encourage me, how would you do that?
Okay, so from the question that you have asked, NMB over time, the 5 years, we can see the risks have reduced. So since NMB is a very prominent bank, you can do banking from anywhere you want to do. And foreign exchange values, I think if you're to send a higher amount of money, they would definitely offer you a better price for that. And now that you can do any transactions from your house or your workplace, I think it's easier to do it, so you can use your bank app if you want to do that. And looking at how you talked about the foreign exchange, uh, I think it's so answering your question. So when we were doing the DDM model, we saw that there was a steady growth in their cost of equity. So when we were doing our general predictions, we had seen that 5 to 10% is usually what big companies or banks consider. 5% is the lowest that they would consider, and 10% is aggressively high. So what we came to a conclusion was 8%. So which means if it's a prominent bank and it's offering you a good transaction or a foreign exchange amount, which means you wouldn't want to rethink your decision of using any other ways of having done that.
I have one more. What's your view on Tanzania as an investment destination? I understand that NMB is in Tanzania, so NMB as a bank looks fine. How does Tanzania, the environment of the country where NMB is, how would you rate it as an investment destination? Basically, would you invest in any entity in Tanzania and why?
So from what I know about Tanzania, we rarely hear about political risks as compared to other African countries. So from an economical point of view, with the mitigated political risk, there is a low chance of loss in terms of investments, so which makes it favorable for you to invest in Tanzania as a whole. So political risks, again, the government regulations, it's quite favorable to foreign investments. And in case you're trying to like build a foreign portfolio investment or direct investment, then following the economic structure and from what we have seen and the risks, they are a bit mitigated. So that's why I would invest in Tanzania as a country.
Good morning to you all. Before you, it's Team C. I am Elizabeth, together with Emmeline, Agnes, and Jerome. In Tanzania's banking sector, size alone isn't enough. Leadership is, and National Microfinance Bank has that. With that, we issue a buy recommendation with a 12-month target price of 13,713, representing a 30.35% upside on the last close of 10,520 Tanzanian shillings, based on the following factors: sustainable earnings growth, structural competitive advantage, and supportive industry tailwinds. Looking at the bank's evolution, NMB was established in 1997, then privatized in 2005, then publicly listed in 2008, where the government sold 21% of its shares to the public through an IPO on the Dar es Salaam Stock Exchange. In 2017, the bank's name changed to NMB Bank PLC. Then in 2020, there was a share transfer of 34.9% shares to RIs till present day. The bank has also won various awards like the Euromoney Award and the Top Employer of the Year. Moving on, the bank operates in three main divisions: retail, serving individuals and providing services such as current accounts; wholesale, serving corporates and providing services such as corporate lending; and treasury, serving businesses and providing services such as foreign exchange. Strategically, the bank has also positioned itself to deliver a winning proposition, operational efficiency, and innovation for the future. Innovation for the future has been seen through the different digital transformations that NMB has, like the robotics and automations. All these transformations have improved efficiency within the bank. Agnes, take us through the industry overview.
First and foremost, looking at the GDP, we see a decline in GDP of the world in 2020 and 2021. This was mainly due to the COVID-19 pandemic. However, Tanzania's GDP remained positive throughout this period. Later on, we see a rise in inflation in 2022
due to the war in Russia. Tanzania's rate of inflation still remained moderate throughout this period. And the same goes for their central bank rate, which has been stable at approximately 6% throughout the period. But we see a decline in the lending rates, but we believe that NMB can rise above this. NMB is well positioned to benefit from Tanzania's Vision 2050, the key drivers being integrated logistics, energy, science and technology, research and technology, and digital transformation to increase their GDP to $1 trillion and their per capita goal to $7,000. The banking sector in Tanzania is made up of approximately 80 financial institutions split into banking and non-banking. The banking split into commercial, community, and microfinance institutions, with our major focus being the commercial institutions, where we see giants like NMB and CRDB, with NMB leading in the profitability category and coming second in assets, customer loans, and advances. We later carried out an analysis on the industry using the Potter's 5 Forces radar, where we realized that NMB's greatest threat is the rivalry among its competitors, since they all provide the same services, putting pressure on their prices and thus its profitability. However, NMB has been able to maintain its position among the top banks in the country. NMB is able to further maintain its profitability through ESG, which is environmental, social, and governance. Its pillars being financial inclusion, sustainable financing, sustainable operations, and climate risk. Environmentally, NMB has mitigated climate risk through its Multi-Million campaign, where they were able to plant 1.4 million trees. It reduced on its paper consumption through digitalization, and also carried out green financing, where they were the first bank to issue a green bond. These are in line with SDG 15, 13, 14, and 6. When it comes to social, NMB has made a social responsibility through its diverse workforce, with its female representation increasing to 32% in 2024 from 30% in 2019. They also have a 34% youth composition with a stable workforce retention rate in line with SDG 10, 8, and 5. The bank has further invested more than 6.2 trillion in social initiatives covering education, health, and entrepreneurship. It has also promoted extensive agent network that has brought financial services to rural and underserved population. These are in line with SDG 4, 7, and 10. When it comes to governance, the bank possesses a robust and efficient governance structure led by their chairman of the board with over 24 years of experience, and their management is headed by the CEO with over 20 years of experience. They have a board composition by gender of 83% male and 17% female. The bank's leadership has been regionally recognized by Euromoney Awards, where NMB was named the best bank for ESG in Tanzania, which reflects their validation for its governance practices. And we'll take us through financial analysis.
Taking a look at NMB's top-line growth, we see consistent revenue growth, strong profitability, and attractive returns, with revenue projected to grow at a CAGR of 10% through 2028, supported by NMB's widening product offering across Tanzania's fast-growing economic sectors. And then looking at NMB's balance sheet, we see a consistent asset expansion supported by loan book growth, which is supported by a widening credit offering across Tanzania's fast-growing economic sectors. And crucially, this expansion is accompanied by a declining non-performing loans ratio, reflecting NMB's superior credit risk management. And NMB's earning strength is also reflected in its ability to grow its total operating incomes faster than its total operating expenses. And this has led to a decline of 12% in its cost-to-income ratio. And this reflects further NMB's superior cost management. And this is driven by digital innovation and branch productivity. Underpinning all the above performance is a strong foundation on its capital adequacy, where its total capital adequacy ratios remain well above regulatory and industrial averages. And this is supported by NMB's strong reliance on equity rather than hybrid instruments, with its retained earnings growing faster, reflecting NMB's internal capability to grow its own capital. And moving on in conclusion, NMB's return on equity profile remains one of the best among its local peers. This, combined with a growing earnings per share and dividend per share, combined again with prudent risk management, makes NMB an attractive long-term investment. Jerome, take us through.
Focusing on valuation, we calculate the target price of 13,700, 13 Tanzanian shillings to the 30% with the 30% upside to the close of 10,520 Tanzanian shillings. We use three key valuation methods: the residual income model having a weighting of 30%, the relative valuation model having a weighting of 40%, and the dividend discount model having a weighting of 30%, and giving us the above implied weighted prices. Moving on to the dividend discount model, we used it because of two key reasons. One, NMB pays out dividends to its shareholders. Two, we wanted to reflect NMB's high growth in the near term, followed by stable growth in the long term. Our key inputs were the high growth rate, cost of equity, which is one of the main ones, and terminal growth rate. Our cost of equity inputs were risk-free rate and unlevered beta, market risk premium, giving us a cost of equity of 14.61%. Also giving us a target price of 19,762 Tanzanian shillings. Moving on to the residual income model, we used it because of two key reasons. One, free cash flows of a bank are difficult to determine. Two, we wanted to measure the true value of NMB because it's reflected when you see the return on equity being greater than the cost of equity, giving us positive residual income. Other key inputs were the projected shareholders' equity for the forecast period and net income, giving us a target price of 10,410 Tanzanian shillings and a downside of just 1%. We also performed sensitivity analysis on two key inputs of the dividend discount model and residual income model, which were cost of equity, terminal growth rate. And the intrinsic value increases as the growth rate also increases, and it also decreases as the cost of equity increases. Focusing on valuation, we use two key multiples: price to earnings and price to book. Why? It's difficult to determine debt of a bank. We use two local peers, which was CRDB, its main competitor, and Combos. We also use the average of the price to earnings and price to book, giving us an implied share price of 11,653 Tanzanian shillings. Thank you. Please take us through.
We carried out a risk analysis using the risk matrix that shows the probability and the impact, and realized that cybersecurity risk is one of the most significant risks in NMB. However, there are also other risks like the liquidity risk, the credit risk, and the interest rate risk. With all this said, we acknowledge that these risks really do exist within NMB but can be manageable. In conclusion, the best of NMB is still ahead, and the current price does not fully reflect its future growth potential, and we therefore recommend a buy with a target price of 13,713 at an upside of 30.35%, based on sustainable earnings growth, structural competitive advantage, and supportive industry tailwinds. Thank you for listening. Asante.
Thank you for the presentation. I'll start with one question, and then my colleagues will also ask, and then maybe I'll come back with some more. The first question is on the valuation. Maybe you go back to the slide where you combined the three valuation methodologies that you used. That one. And my question is on the weighting. In short, what did you base on to weight like that? Was there any criteria, and what was it?
So on awarding the weightings, we awarded the relative valuation, the highest weighting of 40%, because we believe it will reflect the current market prices. But the dividend discount and the residual income are a bit behind. That's why we see the dividend discount. The residual income having a downside of just 1%. But we believe that in future, when the reports are out, we can update it and it will give us a positive value. So that's why the relative valuation and dividend discount are 30%, because we try to make them even, but you can see that the relative valuation has a superior value. Thank you.
Thank you. I'm already getting convinced to invest in NMB. I want to understand, where do you people, or how should I relate NMB as a bank in 10 years to come? Because I'm looking at a long-term investment.
In 10 years to come, I will predict NMB to be a stable grown bank with a strong balance sheet which has less risky assets, because once it has grown from this stage where it is, it will lend more to less risky sectors of the economy. And also we see its revenue growing faster compared to its costs, because it has a superior way of managing its costs. So we see profitability also increasing at a very fast rate. And then we acknowledge that management has taken so much steps to make sure that credit risk does not get out of hand. That's why from the past we have been seeing its non-performing loans ratio declining, right now at 2.9. So predict NMB in 10 years to come to be less risky, to be more profitable, and to have a strong balance sheet. Thank you.
To add on to what my colleague has said, in the past rates, we've seen that NMB has had a stable growth rate. So we believe that given that they are able to maintain this stable growth rate with its good leadership and governance, it will be able to be still among the top banks in the country.
Thank you for the presentation. It was quite great. Can I go to the competitive positioning of the company? Regional wise, how competitive is it? Or from Tanzania side?
In the region, NMB and CRDB look to be some of the best performing banks. If you look at the way people are investing in them, they believe they will move at a faster pace. In our valuation, we realized that when we valued it against local peers, NMB was highly valued. So that's why we've been focused on mainly its Tanzanian peers. So competitively, we believe NMB is among those best banks within East Africa.
You adding something?
Yes, I wanted to add to complement what he said. He talked about investors in East Africa appreciating its competitiveness. And if we look at the second slide, if you look at the second slide, we see NMB. Its stock performance has been trading at a premium compared to these other banks in Tanzania. I know this is only Tanzania, and you could be asking about East Africa, but in general, we think this trend, this kind of premium trading could be reflected anywhere enough in East Africa, because NMB is one of the top banks in East Africa by many criteria, talking about its credibility in managing its risk, how fast it grows its assets. So all that can be reflected in how it trades locally in Tanzania, and we predict that this makes it a very competitive bank in the region, East Africa, to be particular. Thank you.
Maybe a follow-up question on competitiveness of NMB in East Africa. So as a Ugandan, we have banks listed here in Uganda that I could invest in with my Uganda shilling. If I'm to invest in NMB, I have to change my Uganda shillings to Tanzania shillings to invest in NMB. So my question is generally around currency risk. As a Ugandan, what does my currency risk look like? moving money from Uganda to Tanzania to invest in NMB. Secondly, being a Ugandan, I'm looking at Tanzania from here. And I would like you to comment on the recent incidents in Tanzania, political incidents that were all over the news. I think we all saw them. How would that affect my investment if I'm to move my money and invest in NMB on the Dar es Salaam Stock Exchange?
Thank you, ma'am. So if I'll take you through what you pointed out, you're investing in Tanzania and you're a Ugandan. So that is, to be particular, that is for exchange risk, foreign exchange risk. So if you invest your money in Tanzania, there's a risk that by the time you want to bring back the returns of your investment and also maybe your initial investment, I mean your profit and the returns, it is possible that the Ugandan shilling could have depreciated, so that would make your return to be less valuable because the Ugandan shilling has depreciated, so you would get less than what you'd get if it hadn't changed. So I think there the main risk is foreign exchange risk, and because our markets are volatile, so it may be less valuable. Yeah, thank you.
To add on that, we can all see that the Tanzanian economy is performing generally better than the Ugandan economy. As far as I know, Tanzania has a better currency conversion rate compared to Uganda. So if you would exchange to the Tanzanian shillings to buy NMB shares, I think you'll be able to realize you'll be able to beat the Ugandan inflation rate, which is currently around 9%, compared to the one in Tanzania, which we saw that it was reducing, and we believe NMB is going to rise above that because of our projected net income, and we believe it will continue to increase. So to invest in NMB, I believe it's the right choice. You'll be able to get dividend return and also realize an increase in share prices. Thank you.
Okay. The incident?
Oh, the incident. As far as the incidents are concerned, given that NMB has majorly invested in its digital sector, we believe you could have used mobile banking because it wasn't safe for people to really move outside because people you get killed. But in case you wanted to do maybe a transaction, I think you would do it via mobile. So via mobile banking or anything of that sort. And as far as regards the whole industry-wise, I think the supply chains were a bit constrained, and since NMB is focusing on wholesale, on deepening in its wholesale, so that means that products such as trade financing, supply chain financing, they had a small hold.
However, as we previously mentioned, NMB was able to sustain the COVID-19 and the wars in Russia through the macroeconomic environment in Tanzania, which has been favorable to the banking sector. So we believe that the economy of Tanzania would still be favorable for the banking sector, so the NMB will be able to arise above all the conditions.
Okay.
Maybe one last one at my end. Me as a person who is dealing in gambling and importation of firearms, is it okay? Will it be okay, or do I get comfort that NMB can be at my back in supporting my business?
I think the answer to that would be no, because all those are illegal activities. Because as we all know, importation of firearms is supposed to be like it's directed to a particular group of people, like the army. So as an individual, if you're doing that, it's very illegal. And NMB, okay, basing on its well-built reputation, I don't think it would want to incur a reputational risk by getting engaged in such.
Maybe just a clarification. You did introduce your team, but you didn't tell us what team number you are. Yeah.
I say Team C.
Team C. Okay, thank you. No more questions. Thank you.
Dear esteemed judges, faculty heads, and the participating bodies, protocols observed. Before you is Team D. My name is Amolo Al-Faksad. My fellow analysts, Kaserika Christian Sasuma and Jacinta Mugole. We have come here to reaffirm our buy price with a target price of 10,449 with a 12-month period with a best price of 8,200 as per 16th December 2024. I'm going to talk about the NMB business model, industry, and strategic overview. So,
Sorry, we can't see your presentation.
the esteemed judges, faculty heads, competing bodies, protocols observed. Before you is Team D. My name is Amola Alfaxad Makai. My fellow analysts, Christian Kasirika Sasimwa and Jacinta Mugole. We are here. After doing a good analysis, we are here to affirm our buy price of 10,449 Tanzanian shillings with an upside of 27.4%, with a best price of 8,200. I'm going to be talking about the NMB business model, industry, and strategic overview. As we can see, NMB's share price increased from 2,000 Tanzanian shillings to 8,200 Tanzanian shillings. You can see from 2022, it was from 2020 to 2022, it was gradually low, but from 2022 to 2024, it rose. So we expected it to rise up to 10,400. And as per the report released 2025, it reached that target. So I'll be talking also about the business model and strategic overview. Now we know that NMB operates Tanzania's largest retail franchise with 8.6 million customers, up to 240 plus branches, 50,698 agents. This is good because it touches all its clientele, as we can see from the geographic footprint, from the rural, peri-urban, and urban tier. We also see that there's a business segment mix, retail banking, corporate banking, which means it touches all the sectors. There's also, we see that lending and deposits increase. For example, we see the loans reached up to 8.5 trillion Tanzanian shillings and the deposits were up to 9.6 trillion Tanzanian shillings. We also see that the ROE increased up to about 25.2%. And the cost of income ratio also reached up to 38.3%. So the industry structure and market growth dynamics, we see that Tanzania is one, it has a good GDP in East Africa, one of the best. It has about 5 to 6.5. Now, NMB has greatly contributed to this. For example, from the corporate tax that the government alone gets from NMB, NMB has financed and given loans to businesses that are taxed by the government, increasing the increasing the GDP of the country. We can also monitor the market growth and dynamics from the Porter's 5 forces model, as we see that the threat of new entrants is minimal because in Tanzania, top banks such as NMB, CRDB have set a standard or a good business model, limiting these other businesses from coming in, banks from coming in. The industry rivalry is a bit high, as you can see, because Tanzania has top banks. For example, CRDB, threat of subsidies is minimal, bargaining power of customers is also minimal, bargaining power of suppliers is also minimal. Now, the investment thesis. Our investment thesis is supported by 3 drivers. That is the structurally superior profitability driven by scale and operating leverage, sustainable high ROE supported by strong capital generation, low risk growth rate profile underpinned by strong asset quality and balance sheet resilience. Now we're going to start with the first one, the structurally superior profitability driven by scale and operating leverage. As we see that from 2020 to 2024, the pre-tax profit went from 301 billion to 93 billion. This was at a factor of 3.1. The pre-tax margin also aggressively went high from 42% to 60%. We also saw that the cost to income reduced from 58% to about 40%. This is because of 96% of the transactions were digital. For example, digital banking, which reduces on the cost of operation. As you can see from the graphs there. Sustainably high ROE supported by the second driver, supported by capital generation. We see that the ROE from 2019, it hit about 19%. In 2023, it reached about 25%, but in 2024, it rapidly shot high to 26%. Also, the return on assets was a little bit good, 4.9%, which is good for the balance sheet. We also saw equity rising from 1.3 trillion to 2.56 trillion, as you can see from the graph above. We also saw the leverage reducing from about 6.24 to about 5.37, as you see from there. Now, the third driver is low risk growth underpinned by asset quality and funding resilience. We see that the loans increased to about 8.5 trillion. Also the deposits, making the LDR balanced, which means that the bank was aggressively giving out loans, but also leaving out an 11% for liquidity and to handle other issues, as you see below. Now, I'm going to talk also about the environment, social, and governance. So we see that despite the fact that NMB is a financial institute, it also impacts the environment in some way, but not directly, indirectly, through its customer finance operations. For example, when you finance the oil sector, the agricultural sector, and manufacturing sector, these have led to about 80% of the emissions. But despite the fact, they have come up with ways to mitigate these. For example, solar energy, treating water, which has reduced the emissions to about 45.2%, as you see. So I'm going to talk about social. So socially, NMB has reached all its clientele with over 240 branches, 714 ATMs, 40,698 agents, and that is good. As we see that NMB, as per the report of 2024, it had about 3,868, but the report released in 2025 shows that the employees increased to about 4,000. That is very good. There is also inclusivity, which shows that in many organizations, there are few females, but NMB shows you that they have 48%, but of the 3,868, they're about 32% in the senior management staff, which is very okay. And also they give bursaries, they train their employees which improves on their skills. So the governance part, NMB has 8 non-executive directors with diverse skills. For example, in risk analysis, ICT, and these have really led to the performance of NMB, and they have a good governance framework. I would like to pass the microphone to my fellow analysts to talk about financial analysis.
Thank you. I'm going to talk about the financial analysis, where to understand our investment case, we analyze the financial performance, looking at across the key factors that shareholders look at. And we saw that NMB has a strong earning momentum, which is demonstrated by a pre-tax profit increasing from 301 billion to 931 billion from 2020 to 2024, with a net margin expanding from 29% to 42%, and the pre-tax profit after tax reaching 641 billion. NMB also has a strong efficiency, which is demonstrated by the cost-to-income ratio improving structurally from 48 to 38%, driven by digital scale and operating leverage. We also looked at the capital, liquidity, and asset quality, and we saw that NAB has a strong capital and liquidity. We saw that equity doubled to 2.56 trillion over the 5 past years, and the loan-to-debt ratio remained healthy at 89%, supporting balanced loan growth. It also has a high-quality asset book, which is demonstrated by the loan compounded average growth rate of 20%, with a non-performing loan ratio of 2.9%, which is reflecting a disciplined risk management, as you can see from the graph below. For the valuation, we issue a buy recommendation with an overall target price of 10,408 Tanzania shillings, implying an upside of 27.4% from the closing price of 8,200 as from December 16, 2025. To arrive to that target price, we use 2 methods, the DTM and the relative valuation. And with the DDM, we got a target price of 10,901, implying a 33% upside. And the relative valuation, we compared NMB with Stanbic Bank, Equity Bank, KCB, CIDB Bank, and we got a target price of 9,393, implying an upside of 14.5%. And this was based on factors such as derived from NMB's strong market position and high profitability and consistent dividend. I'm going to talk also about the risk analysis, and we saw that NMB, like any other organization or financial organization, they face different risks, and we saw that the highest risk that can impact NMB is the interest rate risk, but NMB has already implemented mitigation against those risks. It's also affected by macroeconomic and geographical risk, regulatory risks, foreign exchange risk. I'm going to invite my friend to conclude.
In conclusion, I would like to inform our investors that despite the fact that NMB Bank is faced with many risks, these risks are minimal and can be mitigated. We also see that that NMB has a good return on equity, solid capital, resilient asset quality. So I would remain with my suggestion that with a target price of 10,448.56 Tanzanian shillings. Thank you. I would welcome questions from the judges.
Thank you for your presentation. I've noted that your deposit is at 9.5 trillion, and the loan being at 8.5, meaning we have quite a good range of deposit, which is redundant. I don't know. Do you see any risk, any liquidity risk in that? Of having a deposit which is not in usage?
Please, can you ask again the question?
I noted the deposit is at 9.5 trillion and the loan is at 8.5 trillion. I was asking, it seems we have a lot of excess liquidity. So I want to understand, do we see any risk in relation to that, having liquidity which is unutilized?
No, there is no risk about it, because the more you receive of deposits, you're going to give loan without any problem, and the loan are going to come with interest. If someone comes with a request for a loan, it's going to get that loan easily. So there's no risk of having high liquidity.
One last one on that. The component of the deposit you have, do you have both organic deposits and the fixed bit of it? What is the component of this deposit?
Pardon?
The deposit that NMB Bank has.
Yes.
Is it purely saving deposit, I mean the organic deposit, or what percentage is it to like a fixed deposit? I want to break it down in a simple term.
Of course, they have to be mixed, because if it is saving, the bank needs the deposits, because from the deposits is when you get a deposit, the bank makes money when they get the deposits. They utilize all, be it savings, be it fixed. the bank has to make money. The only way the banks make money, for example, NMB, is when you get a deposit, you loan it out. Now, when you loan it out, you get interest from it. That interest is what gives them the money. So that's why deposits are necessary. Be it, you said organic, be it fixed.
I'm looking at NMB having deposit of 9.5 trillion, but out of this 9.5 trillion, let me say like 7 trillion, it's a fixed deposit, which will require the bank to incur interest expense, and the organic deposit is only 2 trillion. Don't you think it is a big risk?
Yes, it would be a big risk.
Thank you for the presentation. Could you go to the valuation slide? Can you take me through that, also the assumptions that you based on mostly? The weightings?
So with the relative valuation, we got the target price of 9,393, implying a 10-month target with 12 months target price. And we got a weighting of 30%. And with the dividend discount model, we got 10,000, the target price of 10,101 with a 12-month target with a weighting of 70%. So we combine those two methods to get a target price of 10,449.
What was the thought process of 30 and 70?
The DDA model, you can see the share, the dividend per share increased from 2019 to 2024 from 96 to 429, which is that side there on the table, with a return on equity of 25% and a retention rate of 69. So we got that implied high growth rate when we get 25.28 times 67, and we got an implied rate of 16.94, and we used the 5 years period, and we projected our dividend from 2025 to 2029. We get 501 to 937, and the present value of high growth stage is 3,991 with a terminal growth rate of 6%. Then the present value of terminal value is 6,910, and when you get the sum of PV, we're going to get 10,901, which is the target price there, and it's implying an upside potential of 33%. Yeah. Then when we go to the relative valuation, we compared the NMB to other bank like Stanbic, Uganda, Equity Kenya, KCB Bank, CRDB, and the price to earning ratio. We compare those price to earning ratio and and we got a target price of 9,405. It is implying an upside of 14.5%. Yes.
So my question would be on the environment, on Tanzania as an investment destination. What are your views? Being a Ugandan moving into the Tanzanian market, would you encourage me to move there as much as NMB is a good investment? Is the environment also a good fit for a foreign investor like myself?
Yeah, it would be good.
Why?
As you can see that, and because why they brought in, first of all, they brought in this ESG part in analysis when it is new, but they brought it in because imagine an investor investing in a company, and then you hear that due to reasons like pollution, the company was closed down. So it was brought in to check into the matter that everything must, before an investor takes on to inject money in your business, he has to know everything. For example, is how are they treating their employees? How is the environment being observed? How are the resources being controlled? So now, like NMB, we see that despite the fact that it is not like a manufacturing, let's say, a cement factory, but it is a financial organization. But through when it finances its customer activities, for example, you can finance the oil sector, you can finance agriculture, you can finance manufacturing. They pollute, but it can be brought back to you. So they found ways of mitigating. For example, solar energy, where we see that they conducted in the solar energy project, bring about 22,760 megawatts of power from solar energy. That is good. If I was an investor, I would be so happy to see this.
I think maybe you misunderstood my question. Also matters. And so my question is on Tanzania as an investment destination, considering that NMB is in Tanzania.
Sorry for that.
Okay.
Okay, so Tanzania we can see that, first of all, the population alone is higher than that of Uganda. So it means that there's a rich clientele for this.
Okay. Thank you. No more questions. Thanks. Thank you. Please.
Good afternoon, ladies and gentlemen. This is Team E, and I am Nabukara Veronica, and these are my teammates.
Mr. Makampa.
I'm Norris Mogume.
We shall start by giving a brief company overview about National Microfinance Bank Tanzania. It's a public limited company. It is the largest bank by asset and branch network with over 20 years of operations. And this is evident in the 240 branches it has nationwide. The bank operates three main segments. Which are the retail banking, wholesale banking, and the treasury. Retail banking is the major source of revenue for NMB's bank operations, and it deals with individual accounts of the different customers they have. Wholesale banking deals with corporate and institutional accounts, which are the different multinationals and public sector entities. And the treasury deals in liquidity and funding, which is the foreign exchange and mainly the foreign exchange and government securities. By distribution, NMB Bank has a coverage of 97% districts that it covers in the country, and approximately 50,000 Wakala agents with 714 ATMs running nationwide. The different services that NMB Bank offers to its citizens are PayLink, which enables customers to transfer money from one bank to another in real time, and NMB Wakala, which enables different agents to carry out the different bank services like sending money to different people without having to go to the bank. And in the digital transformation, NMB Bank has been able to enable many of its customers to access its services online or digitally using the phone, let's say. Mainly 4% of the bank services can be accessed at the different branches that they have. And the bank lending profile by sector, it's 61% that is lent to the individuals, and then 13% to agricultural loans, 11% corporate loans, and the rest.
Yes, after analysis of NMB data, we realize that NMB has achieved a return on equity of 27% approximately, which reflects a strong profitability, efficient cost efficiency, and robust net income margins. The bank's cost to income ratios remains below the industry average, and this showcases operational efficiency and effective cost management. The non-performing loans of the bank have reduced to a 2.8%, which indicates prudent credit underwriting and strong risk management. The loan to deposit ratio stands at, the bank has a high loan to deposit ratio, which highlights efficient balance sheet utilization. However, this also leads to low flexibility in liquidity in a tightening funding environment. NMB's financials and financial performance is very strong. And this brings us to our valuation. We employed different valuation methods. That is the dividend discount model, the discounted cash flows, and relative valuation and residual income. The dividend model bases basically on the bank's dividend payouts, and given that the bank has a stable dividend policy, we project and discount the dividends to the cost of equity. Then the free cash flow to equity looks at the free cash available for the shareholders. And we come up with a sell recommendation with following these different valuation methods. We use all the methods to eliminate the bias, the model-based bias.
Like any other industry, the banking sector faces very many competition, as there are very many players, and we assess NMB competition and how it is able to overcome and be among the largest banks in Tanzania using the SWOC and the Porter's 5 forces analysis. The strengths of NMB, it has very many branches countrywide. It has 240 branches as compared to other companies. Those are very many. And the opportunities, the opportunities are, there is a large population of youth in the country that is growing, which puts forward very many potential customers. And then the challenges it's facing, it is mainly based in Tanzania, which limits its customers to only the Tanzanian market.
So I'll come in with the key investment risks that NMB Bank is facing. And the first one is micro concentration risk. This is whereby NMB Bank is focused and steadily focused in Tanzania. And the next point there we're actually having is regulatory compliance risk. This is whereby there are high capital requirements for you to join into this industry, whereby they have 20% as their reserve rate. Then there is climate exposure. This is whereby when you look at NMB's bank structure, they usually offer out loans to agricultural people. So these agricultural loans come with different problems. For example, it's droughts and then floods, which can affect on their payment. Then liquidity concentrate that I say, they have a tight loan to deposit ratio of that rate that's limiting for growth, their loan growth. Moving, NMB Bank has other risks such as cybersecurity, and this could be to cybersecurity attacks, since NMB Bank, as my colleague had explained earlier, that it is moving into digital inclusion in their operations. So the risk of credit risk, this is whereby the borrowers themselves will borrow these loans. For example, people who deal in the agriculture sector may default on the loans to the unseen climate exposure risk that I had explained on earlier. When you look at the liquidity risk, this is also going to the reserve risk that they are kind of having. Other than that, NMB Bank is also facing emerging risks. And for example, one of the emerging risks that they are having there is the people risk. This is whereby when you look at the banks in Tanzania are highly competitive, you get? So there is struggle to pick up new talent. There is also another risk of model risk, which is whereby a risk of valuations, that when they are trying to make these projections, can make an wrong assumption which could affect them. Then we are having an economic risk. This is going to based on the economic indicators in the economy. So when you look at their environmental overview, this is whereby the NMB Bank has introduced the first sustainability bond, and this bond is over 400 billion, you get? So, and then it has also come up with greenhouse protocol, which is used to measure the greenhouse, so it's an international standard that is used to measure the greenhouse emissions in the country. And then the Gemini bond is also categorized into various things, which is renewable energy, clear transportations, which is directly linked to the sustainability development goals. So when you look at the structure of NMB Bank, it's also divided into two, whereby you have the executive director, and then we have the top management. So they are both led by the chairman and then the CEO, but the bank itself has committees, which are executive, audit, and human resource and remuneration, as well as craft. And these ones handle different cases in there. The bank itself has different lines of defense, which is management, risk compliance, and then adult what? So internal audit. So when you look at the governance overview, so NMB Bank promotes sustainability through governance on the different levels. For example, the board level, and then we have management level and the sustainability team under them. So this helps the bank to run its operations easily. Then socially, NMB Bank has, in 2024, was ranked as the top Tanzania employer bank of the country, which helped to empower lives of the people in that country through talent and culture, and then financial what? Inclusion and women in business. This is whereby it also introduced a Jasiri gender bond, and this one which is meant to empower women in business, and the size of 25 billion. So when you look at sustainability overview, NMB Bank has cut its water consumption by 10%, reduction of paper usage to 14%, and has gone ahead to get various words that show that it is sustainable. So then we are going to sustainability partners. NMB Bank has gone ahead to secure partnerships, both locally and then internationally, whereby it has assured, locally it has partnerships with the government of Tanzania, Zanzibar, and then Ngozi Institute, and then internationally, it has United Nations, it has Central Park Bees, among others. So when you're looking at the shareholder overview of NMB Bank, the top shareholder they have Arise BLV, then the second one is Government of Tanzania, and then National Security, NSSF of Uganda. So when you look at the ownership overview, when you look at the stocks of NMB banks are usually owned by institutional investors, followed by the public companies listed, then a little bit of their mutual funds, then other people come in from that. Good.
So that's how we conclude our presentation. Thank you very much.
Thank you for your presentation. I'll start with one question on valuation. Please go back to your slide on valuation. No, the one, that one. So I see you used 4 methodologies: DCF, okay, free cash flow, equity, dividend discount, relative valuation, and residual. And my question is really centered around the free cash flow to equity, why that valuation methodology, and also maybe you could walk us through why you picked the weights, why you allocated the weights to each individual valuation methodology that you did.
For starters, different allocated weights were chosen basically depending on the relevance and relevance and reliability of the model in the industry. Since the discounted cash flows basically look at free cash flow to the investors, how much is available for the investors after debt repayment, reinvestment, and operating expenses are paid off. It becomes very relevant for.
To add on that, when you look at the discounted cash flow method that we're using in the valuations, it looks at all cash flows of the bank, you get. So we are going to get based on their future projected cash flows that are going to have, then we took them to the net present value of now to come up with that. But now, when you look at our discounted cash flow, it involves that free cash flow, cash to equity, yeah? And now that gives it a bigger weight because it does not exclude the free cashes that this company gets.
I also have a question on NMB in relation to the industry. Where is it placed in terms of assets, in terms of NPL ratio, and in terms of cost-to-income ratio?
So when you look at, as my colleague had stated earlier, NMB banks in terms of assets, it's holding one of the largest assets in Tanzania. And when you look at its NPL, it has about 2% of non-performing loans. And then, I beg your pardon on the last.
On the NPLs, fine, it's 2%. What is the industry average?
The industry average is around 6%, if I'm not mistaken.
The industry average, the NMB bank average NPL is about 2.8%, which falls below the industry average of about 3.2%.
Okay. And cost-to-income ratio?
Cost-to-income ratio, NMB.
In comparison to the industry, does NMB, is NMB higher, lower?
No, NMB is lower, though it's increasing as when you compare to projection. The cost-to-income ratio keeps on increasing, which puts it in a bad position, implying that its operating expenses keep on increasing with time.
Okay.
Thank you so much for your presentation. I want to understand, it seems NMB as a bank, it's doing well in the banking sector in Tanzania. Which competitive advantage do you have over others that is bringing out the supply? According to your presentation, I've made known that NMB is one of the banks that is performing well, both in assets and liabilities. I want to understand which competitive advantage do you have over other banks that is putting you in that position in comparison to other banks?
NMB is performing well, and I believe its competitive advantage is mainly on the wide coverage or the branch network. It has very many networks all over the country, and according to the district coverage, it's 97%, which shows that it covers many of the districts in the country, meaning they have like very many customers all over the country, which puts it at a very high competitive advantage against others.
Wadde kamera nyabo wekwasa. PTZ weda wenzija mukke bonjiteeke egende ku ziri screen PTZ ziyingire wano nga screen zigaana kati ng'okubigira biri mu network.
Sunday woli. Sunday na bakuchaji. Tugende jjenje. Na kuchaji. Chachi siyo. Ne yajiri ni yatula najiri kwa nagenda mu America. Si genda kuchaji. quite number of next slide for this one. And how would you encourage me to put my money now into Tanzania? Kalina asobola kukomuto so kati it depends on how urgent do you want. How would you encourage me to put my money in Tanzania? I know it's number one in Tanzania, but someone here in Uganda, how would they get all of this?
Destination, we recommend usually based on all that and the Ugandan investor invests in the market of Tanzania. Solely based on the we've seen previously that we have been able to invest. In the case of stability, in Tanzania, you can't be sure that just to so true it is there. That's why I recommend by
All right, thank you. So we just did an update by recommendation of 84. Use that update by recommendation. Sunday ngina kama tugendera mbinu bebi tugende mukinte kusaba kituo kyasaba wamma owulidde agala tugende kukino zabi
you need to think about the background, mitigate conditions.
I think you're confusing us. Because it said by recommendation. And then, all the
Is that what you
even others, not by recommendation.
Hello.
Your price
a price there okay and
question was
9,120.
okay. All right. Yeah, I think you needed to display that rate is very bright so that we can remember it. Okay, thanks.
Thank you very much.
Thank you very much, our judges, and thank you so much, teams, for your great display of performance there. Congratulations on completing the first round. So this brings us to our first round of 5. We're going to take a short break. We'll do a quick tally of the scores from the judges, and then when we come back, we'll announce the 3 teams that will be proceeding to the final round. Please, you're welcome to take a cup of coffee, tea, and some refreshments, and then come right back so that we can start in the next 15 minutes. Thank you. Good afternoon. Welcome back to our afternoon and final session. I hope you all have been energized and looking forward to the next very interesting and very intense session. As earlier mentioned, we had planned to move 3 teams to the final round, but upon consultation with the judges, they advised that we move only 2 teams to the final round. So without further ado, please allow me to announce the 2 teams that will be advancing to the next round. So in the next round, we will have the 2 teams come back to present for another 10 minutes, untimed, and no questions, just to refresh the memories of the judges. They'll grade you or rank you once more, and then we will tally those scores to determine the winning team. Is that clear? All right, and the rest of the teams do not need to move out of the room, including the other second team that is competing. So if that's clear and no questions or clarifications needed, the 2 teams advancing to the final round are the following. And I am announcing the team names as allocated, not as per the university names. So the first team is Team A and Team C. Congratulations, Team A and Team C. And we'll jump straight into a presentation from Team A. Please come forward.
Good afternoon, the judges, protocol observed. This is Team A. I'm Rogers together with Alan, Vanessa, and Winfred. According to our investment summary, we institute a buy recommendation of NMB PLC based on our 12-month target price, 12,166 TZ shillings, for an upside potential of 5.33%. That's the format of our presentation. First take me back up. investment summary. Now, when you look at the investment summary, we are trying to tell the investor that as Feb 9th, 2026, the price was 11,550. So we are telling them that according to our valuations, our target price will be 12,166 TZ shillings by an upside potential of 5.33%. So when you look at the current price already at the Dar es Salaam Stock Exchange, it's 11,780 Tanzanian shillings, meaning that the price has already started increasing or moving upward, and we're in range. Much as it's still modest, but it's giving hope. So you can invest as an investor. Let's proceed. When you look at the history, it was incorporated in 1997 after the restructuring of National Bank of Commerce, and privatization 2005, 49 stake to investors led by the Rabobank Group from Netherlands. Going to 2008, the initial public offer was made or issued at 21 stake by the government of Tanzania. Remember, National Bank of Commerce was owned by the government of Tanzania. So when we move on to 2010 to 2020, we saw an expansion into corporate banking, agribusiness, finance, and small medium enterprise lending. Not forgetting that in 2008, we had a financial global crisis. Most financial institutions were performing poorly. But when you look at the NMB PLC, it kept on growing and it kept on expanding. Meaning that if, to an investor, this means that if there is any kind of buffer, we can trust NMB because it was able to overcome the global financial crisis of 2008. From 2020 to 2024, we see a digital transformation and strong revenue diversification. But we also see an enhancement in by 34% around 2017 by the Rabobank Group. So NMB is segmented: retail banking, wholesale banking, treasury. Retail, we look at wholesale, we look at institutional banking and corporate banking. Retail, that's when we look at personal loans, personal accounts, just small loans. Treasury, we are looking at managing the liquidity of NMB. And when you look at the Treasury Department of NMB, it has gone ahead on its website. It uses the forward contracts and the swaps in ways of managing foreign exchange risk if an investor from another country was able to or wanted to invest in NMB PLC. Please, Winfred, take us through analysis, business analysis.
For the business analysis, we use two tools to assess NMB. One is the business model canvas, which we used that helped us assess how NMB is able to create, deliver, and capture its value within, in order to assess its level of competitiveness within the industry. Then the second tool we used is the SOC analysis, as NMB terms it, where we looked at NMB's strengths, weaknesses, opportunities, and challenges within its operating environment. So for NMB's business model canvas, we realized that NMB has a wide customer base, including SMEs. It's serving some key sectors such as the agriculture sector, mining sector, as well as retail, corporate clients, institutional customers, such as NGOs and treasury as well. This means that NMB has a wide customer base. For its value proposition, it's centered around customer-centered services, where their main strategy is accessibility. They have set up various branches. They have over 200 branches. They have 50,000 agents within the country. Therefore, their services are easily accessed by customers or the population across the country with ease, as well as digitally driven service. As you know, Tanzania's population is shifting towards, it has now shifted towards, it has a larger youth population. Therefore,
the youth of today want convenience. They want to deal with digital services. So that is one of the value that it is offering to its market. It delivers its services through channels such as branches, ATMs, and agent banking, which is basically the NMB wakalas. Then for its customer relationships, NMB uses a multi-channel engagement approach with over as earlier mentioned, with over 700 ATMs across the country, 50,000 plus wakalas, those are the agents, and 200 plus branches across the country, as well as its customer-centered service. NMB ensures its transparency by releasing its financial statements as well as informing its market about key decisions that can affect them. Its key activities include deposit mobilization, lending, foreign exchange services, and advisory services as well. NMB partners with regulators like the Bank of Tanzania in terms of regulation, and then with MasterCard as well. MasterCard gives it card services. People are able to use cards to access NMB services. Then for its key resources, they are basically its skilled employee labor force, as well as its strong financial base. NMB's main revenue streams are interest and non-interest income, and its cost structure is mostly made up of salaries and staff allowances. I want to head to the SOC analysis, and for NMB's strengths, we highlighted 3. That was its strong asset base, large agent network, and the strong and experienced leadership with a diversified skill set. So for NMB's strong asset base, it has continuously grown over the years, which gives it an advantage. And for its large agent network, as earlier talked about, it has a wide branch network, enabling it to reach its vast market. For the strong leadership, I think that speaks for itself. And then for the weaknesses, NMB is currently only situated in Tanzania, which is its dependence on the Tanzanian market. However, in its agenda 2025, it has included as part of its medium-term goals to go ahead to engage in regional expansion. Then for the high rate of credit segment default, that's another weakness that NMB has, which it has kept under control. However, NMB serves retail and agriculture sectors in terms of loans, SMEs, and those are very risky areas. Those are very risky areas in terms of credit. However, NMB has managed to even reduce its non-performing loan ratio with time. Then for the opportunities, it has the opportunity to engage in strategic collaborations with rising fintech companies. It can engage in innovation, digital innovation, which will give it a huge advantage. For the macroeconomic opportunities, one of the macroeconomic opportunities that NMB has is its growing population. The population of Tanzania is growing, therefore that gives NMB an opportunity in terms of market growth. And then for regional expansion, it also has the opportunity to extend to other regions and countries such as Uganda. For the challenges, one of the challenges is high competition. NMB, in Tanzania currently, there is a rise in fintech companies that are offering the similar services that NMB is offering, but at lower costs and with less restrictions and less requirements, which poses a threat in terms of competition, as well as some of the key players in the market, such as CRDB Bank. Then for the macroeconomic instability, as of recent, there was political instability within the country, which affected the economics within the country. However, NMB has still emerged as one of the best banks, and its performance has still had an upward trend, regardless of the instability within the country. And another challenge is the cyber security threats. This is because of NMB's shift towards the digital banking. It's coming up with applications such as the NMB Mkononi, the NMB Jirani bot, which exposes it to a cyber security threat. However, it has managed to keep that as well under control by having a board that has experts in cybersecurity. Yes. In conclusion of our business analysis, based on those details given, NMB has a strong competitive position as well as a competitive advantage, which is backed by its strong asset base and its digital innovation. Went ahead to look at Tanzania's banking sector, which comprises of 34 commercial banks. Some of those are some of the key players, such as CRDB, Stanbic, NMB, KCB, and those banks are regulated by the Bank of Tanzania. Tanzania's banking sector has experienced a huge shift from traditional banking to digital banking. Those are the electronic wallets. People are seeking convenience, so the sector has gradually shifted from traditional banking to digital banking. Some of the key sector highlights, according to the Bank of Tanzania Financial Stability Report, was the asset growth, which totaled to 71.9 trillion, as well as the decline in non-performing loans from 8.9 to 3.2%, and the general increase in profitability. For the macro analysis, GDP in the year 2024, GDP was projected to increase by 0.1%, with a continuous decline in inflation of about 1.6%. That means that those conditions are going to create a suitable environment for economic activities, because if inflation is decreasing, that means that the central bank rate is most likely to drop as well, meaning that the borrowing costs are going to be less. Hence, ultimately, when the borrowing costs drop, that means that the banking sector is going to lend out more because people can afford to borrow from the bank. And when people borrow, they pay interest, meaning that the banking sector is generally going to benefit from that. Then for the global banking, we went ahead to look at the global banking performance. And as you can see on that graph, from the year 2021 and above, the banks generated about 3.6 trillion in distribution capital from 2019 to 2024. Meaning that if the distributable capital is increasing, that means that there is more money in circulation, and I don't know what to but overall, globally, post-COVID, that was after 2020 when COVID occurred, banks generally benefited because they charged higher interest rates, which meant that they got higher interest income, therefore increasing general profitability within the banking sector. We went ahead to carry out an industry analysis to assess how NMB is operating within the industry. So we used two approaches, that is the PESTEL and Porter's 5 forces. So for PESTEL, we realized that economic and technological factors have the greatest impact on NMB's performance. So economic factors such as the inflation rate, as I explained earlier on, such as the inflation rate and the GDP, those factors affect NMB's performance. And then technological factors such as the shift from traditional to digital banking have also had a huge impact on NMB's performance, because the market currently is turning towards digital banking. So NMB had to react to that, because if it did not, it would lose out on potential market. Yes, proceed. Then we went ahead to look at Porter's 5 forces to assess NMB's competitive advantage within the industry as well, and realized that the competitive rivalry within the industry is high. That is because of some key players such as CRDB Bank that pose high competition for NMB. Thus, that has required NMB to continuously be innovative in order to keep up with the competition. And one of the strategies it has used is its wide branch network, because NMB has a stronger physical presence than its competitor, CRDB. Then it also has a high threat of substitutes. That, as I earlier when explained, that is because of the rising fintech companies within Tanzania that have also posed a high threat, because people can easily substitute NMB services with fintech companies because they have less requirements, they are more convenient, and they are easier to get into compared to banks. Yes, that is all I had. Vanessa, please take us through ESG.
Thank you so much, Winfred, for the analysis. Yeah, so the environmental, social governance part. So we recommended a buy for an investor. NMB believes that its profitability comes before the cost of the environment. And as when you look at the 2024 integrated annual report of ANB, you will realize that the chairperson mentioned that they are aiming at being the leading sustainability finance bank. Therefore, they introduced the JAMI bond in 2023. In our first session, they posed a question about, isn't it risky for an investor to invest in to look at the money that is put in the ESG? Well, the JAMI bond, as much as NMB is investing, but there are returns that are got from the bond, and that comes as a leverage for the investor. Therefore, NMB, using the JAMI bond, it has been able to give out the loans to the capable entrepreneurs and projects and projects that are according to the environmental sustainability. Therefore, they have been able to give out clean water, about 26,000 clean water projects, and also helping 36,000 small businesses. We move on to the social aspect. When we look at the social aspect, as a unique initiative, NMB came out with the Jaziri Gender Bond. This comes up with the UN SDG, which is gender equality, SDG 5. And when you're to look at the reports, a number of women have reported progress and success of their businesses due to this Jaziri Gender Bond. Then we move on to the governance aspect. When we look at the governance aspect, NMB Bank has been able to also manifest gender equality, because when you look at their bond, there are 4 females and 5 males. And when you look at their board, the head of the board of director, he's a male, that is Dr. David Carroll Chimbi. And when we look at the CEO of NMB Bank, it is Miss Ruth Zaipuna, which is also showing gender equality. So, in my conclusion, NMB Bank has taken the issue of ESG serious, and it is worth the 10 awards that they have continuously got. Thank you.
Thank you, Vanessa. Ladies and gentlemen, we use the CAMELS model for NMB's financial analysis. First, go back to the first slide. CAMELS, capital adequacy, asset quality, management, earnings, liquidity, and sensitivity to risk. Why we chose this framework is because it's one of the basic frameworks to banks when you're assessing the financials of a bank. It covers capital, it covers the assets, the credit, it covers the management, performance, through cost-to-income ratio. Governance, it covers the earnings through various financial metrics like return on earnings. It covers liquidity through liquidity coverage ratio, net stable funding ratio, sensitivity to risk through credit risk management. Let's proceed to the next slide. So when you look at the capital adequacy of NMB, you realize that Tier 1 capital had an upward trend from 2021 to 2024, and it was above the industry average in orange. The industry average was 12.5 throughout all those years. Now, Tier 1 capital is comprised of the retained earnings, right? Now, when we move on to total capital is comprised of Tier 1 capital and Tier 2 capital. And before I move on to total capital, Tier 1 is it's like the minimum requirement for a bank to major in that tier one of banking industry. So it's very important, and it helps banks to overcome buffers. So the reason as why we have tier two capital is because in case the buffers are so strong, tier 2 capital can come in and cover. It's comprised of investment in securities. So for total capital, which is comprised of tier 2 and tier 1, it also had an upward trend from 2021 to 2024, and it was above the industry average for all the 4 years, providing a buffer for growth stability overall with NMB. Let's proceed. When you look at the revenue analysis, right, we realize that the net interest income and non-interest income had an upward trend from 2021 to 2024. And for net interest, it was increasing at an average rate of 16% per year, and non-interest 23% per year, right? So when you look at the net interest income as an investor, you realize that you're imagining interest earnings, right? Interest earnings. So there was increase in interest earnings throughout the 4 years, and also the non-interest earnings, which is through other core banking operations. So overall, the income of NMB was improving from 2021 to 2024. Please, let's proceed. Furthermore, when you look at its revenue analysis, the slide before, we have seen net interest income and non-interest income increasing. So when you look at this, total revenue is a combination of net interest income and non-interest income. So you realize that we saw net interest income having an upward trend and non-interest. So that means total revenue is also going to have an upward trend over the years. But it led to a similar trend in the net profit, the orange bar graphs, net profit, and the net profit margin from 2021 to 2024, indicating that NMB is not just improving income-wise or revenue-wise, but also as it improves revenue-wise, it is also making more profits year to year over the 4 years. Let's proceed. So when you look at our cost analysis, we looked at non-performing loan ratio rate having a downward trend from 2021 to 2024. But that trend led to a downward trend also in impairment charges. Why did we combine both of these? Is because when the number of loans that are being defaulted on are decreasing, impairment charges are also supposed to cover those loans, right? So when non-performing loan ratio is decreasing, impairment charges are also decreasing. What does this imply? It means that in terms of expenses, we are spending lesser and lesser from 2021 to 2024, lesser and lesser on non-performing loans through the non-performing loan ratio that is declining and the impairment charges at a rate of 8% per year. Thank you. Let's proceed. So furthermore, when you look at the cost analysis, you're realizing that we're having operating expenses having an upward trend, right? You realize those are expenses increasing from 2021 to 2024. But that's not a problem. Why? Because if you realize the physical imprint of NMB, it is having more branches and more agent banking system, right? That means it is investing more in expansion to make more income. But much as operating expenses are increasing or are having an upward trend from 2021 to 2024, we realize a cost-to-income ratio decline from 2021 to 2024. What does it mean? It means that as NMB is investing money, it is investing less than the income it earns, right? So much as operating expenses are having an upward trend, we are realizing that those operating expenses are making more money. In other words, the cost of investing in NMB's expansion is lesser than the income they are earning. So operating expenses wouldn't be an issue. And cost-to-income ratio does not only show that the costs or the expenses are actually declining over the years, it also indicates improved operation efficiency and stability by the management of NMB. If you look at the Camel's model, management cannot be measured, but some of the metrics that we can use to measure management is cost-to-income ratio. The other way you can look at management to verify it is when you look at the board of directors, when you look at the management, how it's comprised, the skills that they bring on board, forensic accounting, auditing, and all that. Let's proceed. So despite of the increase in total revenue, despite of the profitability we are seeing, so as an investor, you're realizing that we are making more money over the 4 years, and we are reducing on our expenses. We are also improving our asset quality indirectly. So what is it in for you as an investor? You're going to realize that due to the upward trend of the net profit, right, from 2021 to 2024, it also led to increase in shareholders' value in form of return on earnings from 2021 to 2025, from 21% in 2021 to 25% in 2024. Yes, you might realize a little bit of fluctuation around in 2023. The above blue line is the return on earnings, but that's not an issue. Why? Because when you look at from 2021 to 2024, there is a trend line showing you that return on earnings is increasing. And as per now, for the fourth quarter in the financial reports of 2025, you realize that it's no longer now on 25% as of 2024, but in 2025, return on earnings is on 29%, meaning that despite of the fluctuation we had, we are still having an upward trend on return on earnings, improving shareholders' value. Let's proceed, please. So finally, we come to our liquidity. We realize that liquidity coverage ratio, net stable funding ratio, leverage ratio were all above the industry average. Industry average was 100%, then 7%. But realize the bank published ratios in the financial report, integrated financial report, were above the industry average. And actually, as you realize currently in the financial report, the fourth quarter of 2025, the reason as to why they are actually not in our slides, because they're not audited reports, right? I wouldn't want to give an investor unaudited reports. But still, I look at them to predict and see the trend line of my financials. You're going to realize that much as liquidity coverage ratio was 597% in 2024, currently in the fourth quarter, it is 896%. So overall, when you look at the financials of NMB and looking at the CAMELS framework, you're going to realize that capital adequacy kept on improving, asset quality was improving, revenue was improving, profitability was improving. So I would really advise the investor and show them that this is a good bank and it's performing well and it will perform well. Thank you so much. Allow me invite Alan to take over valuations. Thank you.
All right, thank you, Rogers. So I'm going to be taking you through the valuation section once again. So for the valuation of NMB Bank, we use 3 complementing valuation models. The first one being the residual income model, the dividend discount model, and the comparable companies analysis. Let's go for it. So to start with the residual income model, by discounting the future expected residual incomes and adding that to the book value at the end of 2024, we're able to arrive at an intrinsic equity value as seen on the screen. And by dividing that equity value by the shares outstanding, we arrived at an implied share price of Tanzanian shillings 14,387. While the current market price stands at Tanzania shillings 11,550 as of 9th February, it shows us that NMB shares are undervalued under the RIM model with an upside of 24.6%. For the dividend discount model, we used a multi-stage dividend discount model to discount the expected dividends of NMB over the next 5 years, and we're able to arrive at an implied share price of Tanzanian shillings 10,688. By comparing to the market price, we can see that under this model, NMB appears to be overvalued with a downside of 7.5%. For the comparable companies analysis, with the market price currently standing at Tanzanian shillings 11,550, we can see that NMB is trading at a premium relative to its peers, with its implied price being Tanzanian shillings 8,832. That reflects a downside of 23.5% and indicating that under this model, NMB shares are overvalued. But this premium just reflects NMB's strong profitability and market leadership. Next slide. In conclusion, the weighted valuation from these three models gives a fair value of Tanzania shillings 12,166 per share, which when compared to the market price of Tanzania shillings 11,550 as of February 9, 2026, it tells us that NMB stock is modestly undervalued with an upside of 5.33%. Thank you. Vanessa, please take us to the risk analysis.
Yes, so risk analysis for NMB. Thank you so much, Alan, for that presentation. So as we move on for the risk analysis, NMB Bank has structured its risk management framework aligned with regulatory framework and international best practice. Next slide. So when we are analyzing the risks, we looked at the major risks that are faced by NMB. Just like any other business, it also faces risks. And we use the risk analysis matrix to analyze our risks. On the y-axis, we are having the risk impact or magnitude, and we are having the frequency on the x-axis. We are looking at the lowest risks as credit risk and funding risk, whereby in funding risk we have liquidity and capital risk. And these risks have been able to appear as the moderate risks because NMB has a strong internal management for it to overgo these risks. For example, when you look at the governance committee, the governance of NMB, you'll find that they have the risk and compliance committee. This is the one that is responsible for overseeing and monitoring and managing the risks that NMB faces. In addition on that, one of the members of the board of directors, he has an experience of 16 years in risk management. And as we look at the highest risks, as we see on the risk matrix, we're having cyber risk, operational risk, and market risk. But cyber risk has appeared as a threat as well, but NMB has been able to manage the cyber risk. Previously, we talked about tools like the system limit, whereby it limits access to the information. Therefore, I would advise an investor to buy due to the strong risk management framework that NMB has portrayed. Thank you. Alan, come.
Sorry. So just to conclude what has been said already, in conclusion, we recommend and stand by our buy decision based on the fact that NMB Bank demonstrates strong financial resilience as displayed by the Commons framework, a competitive advantage over its peers, and meaningful ESG initiatives, all while operating within a stable macroeconomic environment with an overall upside of 5.33%. Thank you.
Thank you very much, Team A. Judges, do you have any comments before we invite the next team? Just comments if there are any.
I'm thinking we give the comments after the second team for both of them.
Okay. Team C.
Good afternoon to you all. Before you is Team C. I'm Elizabeth, together with Emlyn, Aggie, and Jerome. In Tanzania's banking sector, size alone is not enough. Leadership is, and NMB has proved that. With that said, we issue a buy recommendation. We issue a buy recommendation with a 12-month target price of 13,713 at an upside of 30.35% on a close of 10,520. All that was our recommendation is based off the following factors: sustainable earnings growth, structural competitive advantage, and supportive industry tailwinds. Moving on, the bank evolved originally the bank evolved right from 1997, then was privatized in 2005, and in 2008 it was publicly listed. It was publicly listed by government as they put up 21% of the shares on the Dar es Salaam Stock Exchange. Then in 2017, the bank's name changed from the bank's name changed to NMB Bank PLC to represent it currently as a fully fledged commercial bank. Moving on, the bank also went ahead to transfer some of its shares to Arise with a portion of 34.9% till present day. We are also seeing that NMB has also been able to win various awards, like the Euromoney Award. It has won that award for over 10 times in a row. That properly shows you how efficient it is when it comes to its governance strategies. More to it, NMB has also been able to be the first bank to issue a Jamai bond on the London Stock Exchange, as we are going to see in our ESG. More to that, NMB has also won the Top Employer of the Year Award 2024. All these assure us of how efficient this bank is. Moving on, the bank also operates in a diversified business portfolio where it gets most of its revenue from retail, but also goes ahead to integrate other sections like wholesale and treasury. Wholesale providing corporate lending, and treasury providing products like foreign exchange. Moving on, the bank has also been able to strategically focus on various elements, like delivering a winning proposition. This has been through deepening its penetration in wholesale. As I earlier on said, its main revenue was from retail, but it also went ahead. Right now, it's trying to go ahead to deepen its penetration within wholesale. Moving on operational efficiency, that is also one of its focuses right now. And operational efficiency has been seen through the diverse branch creations, where it has created over 240 branches all over the country. And then moving on, it has also carried out innovating in the future. Innovating for the future has been seen through the different digital transformations. Some of these transformations, like the robotics and automation systems, have been put up to increase on customer experience with the bank. Together with that, Together with that, all these digital transformations also go ahead and improve on their efficiency within the bank. I would like to invite Aggie to take us through the industry overview.
First and foremost, looking at our GDP, we all know that the world was greatly affected in 2020 and 2021 by the COVID-19 pandemic. This decreased the GDP by a lot. However, we see that the GDP of Tanzania remained positive throughout this period. In 2022, there was a war between Ukraine and Russia, which put strain on the prices and increasing the prices and the supply chain. However, we see that Tanzania's inflation remained moderately stable throughout this period. And the same goes for their central bank rate, which we see currently at 5.75%. And this has been a favorable macroeconomic environment for the banking sector of Tanzania. We see a decline in their lending rates, but however, we believe that NMB will be able to rise above this because it has done so previously. NMB is well positioned to benefit from Tanzania's Vision 2050. This is because the key drivers of the vision have been integrated logistics, energy, science and technology, research and technology, and digital transformation, of which we see most of NMB's activities are digitalized. This is in order to increase the GDP of the country to $1 trillion and their per capita goal to $7,000. The banking sector of Tanzania is made up of approximately 80 institutions. These are split into banking and non-banking. The banking are split into community, commercial, microfinance, and a few others. Among our major focus being the commercial, where we see giants like NMB and CRDB, with NMB leading in the profitability sector, thanks to its strategic goals, which were previously mentioned by my colleague. Among them, we had of operation efficiency. Through this, NMB is able to have a low cost to income ratio, which therefore increases on its profitability. It comes second in the assets, customer loans, and advances. We also carried out a further analysis on NMB using the five portals forces, where we see that NMB's greatest threat is the rivalry. In the banking industry of Tanzania, it's mainly dominated by banks like CRDB, NMB, NCB, and of which they all provide the same products. This therefore puts a strong competition on the prices that they offer and putting a pressure on NMB's profitability as well. But however, NMB has been able to still maintain its position in the country as the top banks. Continuously, NMB has also been able to maintain its profitability through its ESG, which is environmental, social, and governance, with its pillars being financial inclusion, sustainable financing, sustainable operations, and climate risk. Therefore, I'd convince an investor to invest in NMB because it has been able to maintain all its pillars through its different values. Continuously, environmentally, NMB has been able to carry out a climate risk mitigation through its planting of 1.4 million trees in its multi-million campaign. They also reduced on their paper consumption through their digital banking. There, we see that NMB doesn't use that much paper, which is got from trees, obviously, so they have been able to protect the environment. They also carried out green financing, where they were the first bank to issue a green bond. And these are all in line with the SDGs 15, 13, 14, and 6. When it comes to social, NMB has made a social responsibility, carrying out social responsibility as one of its pillars, where they have a diverse workforce with their female representation increasing to 32% in 2024 from 30% in 2019. They have also been able to utilize the youth in the country in that they have a 34% youth composition in their company and a stable workforce retention rate of 10%, 8, and 5. Therefore, as an investor, you can see that your money will still be in good hands because the youth that they're employing will be the ones to take over the company eventually. Furthermore, the bank has invested more than 6.2 billion Tanzanian shillings in social initiatives like education, health, and entrepreneurship. The bank has also promoted an extensive agent network that has brought financial services to rural and underserved populations. So as you see, NMB is able to cater for all the different categories of the population in the country. And these are all in line with SDG 4, 7, and 10. Conclusively, looking at the governance structure, NMB has a robust and efficient governance structure led by their board chairman, who has 24 years of experience, and their management is headed by their CEO, Ruth Zaipuna, who has 20 years of experience. So why wouldn't you trust such a governance structure? They also have a board composition of 83% male and 17% female. Furthermore, the bank's leadership has been recognized regionally through the Euromoney Award that named NMB the best bank for ESG in Tanzania, which therefore reflects its external validation of governance. Thank you. Emily Intercast for financial analysis.
Imagine you were asked to choose an investment that pays more or an investment that is less risky. Well, with NMB, you don't have to choose because it gives both, as you'll see here. To begin with, NMB's top-line growth, we see consistent revenue growth in the last 4 years. And to point out more, this revenue growth has been supported by NMB's widening product offering across Tanzania's fast-growing economic sectors. Such products as Tikundi, NMB Mukononi, talk about bank assurance, talk about Forex. So NMB is right there in the sector of finance to do a wide array of products to its customers. For comparison's sake, I'll really focus on the relative values rather than the static values. So to begin with, on the top we see a red trend line, that is net profit margin. So NMB has been able to maintain a strong profit margin, and actually it has been growing due to its, profit margin shows how much of a bank's revenues are actually turned into net income or profits. So NMB has been able to grow that, and we predict that that growth will continue for the foreseeable future. And then moving on to the yellow line, which reflects return on equity, it shows also the same trend, which shows what are investors getting from their shareholding in NMB. And we predict it also to grow due to increasing efficiency. Moving on to the blue line, which reflects net interest margin. So NMB has been able to maintain net interest margin actually in a downward trend despite its growing loan book. To point out, so net interest margin, for one, it shows that NMB's assets are improving in quality, because when it is reducing, it means most of the loans are categorized as paying or active, not defaulted. So that for one, it means NMB's assets are high quality. And two, it reflects NMB's cost efficiency, because if that line is declining, it implies its reserve for that is allocated to defaulted loans is also reducing. Moving on lastly to the gray line, which shows return on assets, it's actually the same as the other top lines, except return on assets is more, it has a large divisor. So I think the trend is the same despite the divisor. Moving on to the next slide. So this shows the core of NMB's balance sheet. To begin with, we have been seeing a growth in NMB's assets, which are predicted to grow at a CAGR of a compounded annual growth rate of 11% through 2028. And this will be supported by NMB's exposure to Tanzania's fast-growing economic sectors. These include tourism, agriculture, trade, construction, manufacturing. And this is one of the areas that support our investment thesis because we see NMBs on a positive trajectory to increase its revenue due to growth in loans revenue, that is net interest income. So, to the second trend line, the second graph shows the decline in non-performing loans ratio. So typically when a bank is lending out more, it means that the bank is maybe aggressive in the way it creates its assets by giving out more loans. So despite the fact that NMB is somewhat aggressive in expanding its balance sheet, we see a decline in its non-performing loans ratio, which reflects NMB has employed a superior credit risk management methods in managing its credit risk. Moving on to the next slide. So that here we are talking about NMB's earnings quality. So a bank's earnings quality is reflected in how well it effectively manages its margins. Talk about net interest margins, talk about cost to income ratio. So we see here, NMB's total operating incomes have been growing faster than its total operating expenses, and we project that this trajectory will continue for the foreseeable future because NMB's has been employing, as my colleague pointed out, it has been rolling out more digital products. So the thing with the digital transformation is that it reduces the time you spend meeting the customer, and it also reduces the amount of labor in meeting the consumer demand. So talk about NMB Mkononi, you don't need to go to a bank for you to make a deposit. And actually what digital transformation has done, it has transformed the way people interact with the bank in that right now, the bank finds it less costly to bring more services to more people, hence increasing profitability as shown in the cost to income ratio, which has been declining. Actually, it declined by 12% between 2020 and 2024. So all this reflects NMB's superior cost management. And moving on to the next slide, underpinning all the above superior performance, which I think is exemplary for a bank like NMB, because it is not the biggest bank, is this capital adequacy foundation. So we see NMB's total capital adequacy ratios have been well above both regulatory and industrial averages. And what this means, actually, NMB's total capital adequacy ratio has been 27.23 in 2024, whereas its tier 2 capital was 27.21, and this means that NMB's tier 1 capital is mostly composed of high quality capital. I think you could be talking in a range of 99% of NMB's capital is tier 1 capital. So next, talking about the other graph, it shows an increase in retained earnings, where NMB's retained earnings have been actually the supporting factor for NMB's growth in tier 1 capital. And this reflects NMB's internal capability to grow its capital without actually incurring more debt or issuing more shares. So another thing this reflects is it reflects that NMB has actually a bigger headroom to expand its assets because this represents NMB's less risky assets. So this is top tier assets, less risky. So what happens is NMB has more headroom to increase. For example, if you're talking about its loan book, it could grow it maybe by 11 trillion before it hits this regulatory minimum of 14.5. Moving on to the next slide. To sum up my presentation, NMB maintains one of the best return on equity profiles among its peers in Tanzania. And this combined with a raising earnings per share and dividend per share, and also when you talk about the prudent risk management and also the fortress balance sheet, we see that NMB is an attractive long-term investment. Thank you. Jerome, take us through valuation.
Now, when we look at valuation, we calculated a target price of 13,713 Tanzanian shillings with an upside of 30.35% to the close of 10,520 Tanzanian shillings. We used three key methods, which were the residual income model, having a weighting of 30%, relative valuation, having a weighting of 40%, and the dividend discount having a weighting of 30%, giving us the implied prices of the residual income being 3,123 Tanzanian shillings, relative valuation giving us a price of 4,661 Tanzanian shillings, and the dividend discount giving us an implied weighted price of 5,928 Tanzanian shillings. You can see the upsides that they have. The dividend discount model has an upside of over 87%. The residual income model has a downside of just 1%, and the relative valuation has an upside of just 10%. Diving deeper into the dividend discount model, we use the two-stage because we believe NMB right now is where we would say it's having a high growth, but we believe in the near future it will reach a time where it has stable growth, because this will come as a result of competition. Other banks are also trying to bring out more digital innovations, also target SMEs, agriculture, trade, infrastructure, where NMB is contributing a lot of its loans and advances. Our inputs include the high growth rate, which was return on equity times the retention rate, cost of equity, terminal growth rate. Our cost of equity, we use the risk-free rate, which was the 10-year bond, to show NMB's going concern, because we do not expect it to stop operating within the next 10 years. We used unlevered beta because we didn't want our cost of equity to have the element of debt in it. Market risk premium was 10.06%, giving us a total cost of equity of 14.61%, which we used to discount our values into their present value, as in today. And that gave us a target price of 19,762 Tanzanian shillings. Moving on into the residual income model, first of all, free cash flows of a bank are difficult to determine. So we decided to anchor our valuation on book value, which the residual income model does quite well. And two, the residual income model measures the true value. Yeah, this is where we have our return on equity being our cost of equity. The return on equity of 25% was the return on equity for NMB as of 2024, our cost of equity. Then that gave us a positive residual income figure. We also use the projected trends of our cost of shareholders equity and net income as they've been growing in the past, so that we can use those two elements to get our residual income. Other elements were terminal growth rate and cost of equity, which was the cost of equity that we used was both the forecast and terminal. The residual income just has a downside of 1% and the target price of 10,410 Tanzanian shillings, which we believe as today, their share price is about 11,700 something Tanzanian shilling. Moving on to sensitivity analysis, we generally looked into two key elements, which are cost of equity and terminal growth rate. These two elements helped us in calculating our perpetuity, because we believe NMB will continue operating even after an investor decides to pull out. And upon our analysis, we saw that the intrinsic value increases with a higher growth and decreases with a higher cost of equity. Moving on into the relative valuation, we used two key multiples, which were the price to earnings and price to book. Why? It's difficult to determine that of a bank. We used two local peers, which we really focused on, CRDB being its main competitor. We used Mkombos to be a general representative of all other small banks and other development banks within Tanzania. We also did an East African valuation and upon our analysis, we found out that NMB is far beyond its East African peers, so that's why we generally focused on its local peers. We used the averages of price to earnings and price to book. each having a weighting of 50%, that it contributed to our average implied price, which was 11,653 Tanzanian shillings. When we look at the price to earnings ratio, NMB is lagging behind the peers that we used to value it against. And we believe NMB in the near future will be able to close that gap due to its strategic focus, because it's really doing well in its strategic focus as regards digital transformation, engaging SMEs, its loan advances to agriculture and trade. Yeah, thank you very much. Liz, please take us through the risks.
We carried out a risk analysis using the risk matrix that shows the probability and the impact, and realized that cybersecurity risk is one of the most significant risks within NMB. This is because of the great level of digitalization within the bank. And with that great level of digitalization, it exposes it to things such as data breaches, cybersecurity threats, and all the others. So with that said, we realize that one way how NMB has been managing the cybersecurity risk is through the various monitoring within the very many committees, such as the audit committee, the risk committee. All these committees have been greatly monitoring the technology risk within the company. And with that said, in our report of 2024, NMB also notified us of 0 risks in 2024, and that shows how great the bank is operating. More to it, there are also other risks within the bank, like the liquidity risk. This risk is mostly coming from lack of NMB's inability to meet its financial obligations. But that has not been realized. This is because of the diverse business model within the bank, like the retail banking, the wholesale banking, the treasury. All these are able to bring in more and more money within the bank. More to it is the climate risk. The climate risk comes in because of the element of agriculture and SMEs, but all this has been dealt with through the prosperous ESG practices that the bank is involved in. So with that said, we acknowledge that the risks really do exist within the bank, but they are manageable. In conclusion, NMB is still ahead, and the current price does not fully reflect its future growth potential. So we still want to add our voices and echo more, and echo more saying that we recommend a buy with a target price of 13,713 at a 30.35 upside, based on the following factors: sustainable earnings growth, structural competitive advantage, and supportive industry tailwinds within the bank. Thank you for listening. Asante.
All right, thank you very much, Team C, for that wonderful presentation that has brought us to the conclusion of this afternoon's presentations. I would just want to take a few moments to thank all the teams that have participated. As earlier on mentioned, you're all winners, regardless of the position or the results that will come out of this competition. Thank you so much for being brave and stepping forward to take up this challenge. And we look forward to interacting with you more as you step into the investment industry. As a CFA Society East Africa, we will be available to offer you mentorship, to connect you to the right professionals that will nurture you through this journey. I would like to not take much of the time that we have and invite our judges to provide their closing remarks and any other follow-on insights into today's session. And then after that, we'll have a few closing remarks from a seasoned charter holder that we have in the room, that we are very privileged to have today. And then after that, we will have a photo moment after we have announced the winners and a session for the awarding ceremony. So I would like to hand it over to our judges. Eska, would you like to start? Maybe take the podium, or would you like to speak from there? Okay.
So I don't have a lot to say, but I'd like to congratulate all the teams, even the teams that didn't get to the finals. As Ruth has mentioned, you're all winners. I hope you realize that the fact that you have taken part in this challenge sets you apart. I was trying to remember what I was doing when I was your age. I was definitely not doing CFA challenges. So the fact that you have been able to do this adds value to you. You've added something on yourself, some skill sets that you may not see right now, but are very critical. Presentation skills, public speaking skills, and analysis as well. So for those who are interested in taking or joining the industry, joining financial markets industry, to be honest, in Uganda, it's quite nascent. It's just growing. There's a lot of room for growth. I'd encourage all of you just to look into it and see if it's something that you'd be interested in. As people who are speaking like future analysts, I do have a few comments on your presentations for next time. The first thing is when you're presenting to potential investors, you'd like to focus on the most important areas that are going to sway the person into buying or selling. So those would be the financial analysis that most of you are focused on. The valuation is also quite important, and your inputs in that valuation are also quite important, because then they give an insight in what was your thought process. I like the fact that there were some of you that had sell recommendations. Majority of you had buy recommendations, but I like the fact that there was a team that had a sell recommendation, which shows that there was independence. You were thinking independently while you were making these decisions. It is not always that when you're looking at a company, it's always going to be a buy. Sometimes it's a sell, sometimes it's a hold, and sometimes it's a buy. So you have to be independent as you make the decision, look at all the factors, consider everything that you're looking at, and make the final decision. So I like there was some sort of independence amongst all of you as you were making your reviews. Maybe what I should have mentioned first is that you were all very smart. You showed up like real analysts. We would definitely take you seriously. It matters how you dress when you walk into a room, especially if you're convincing someone to buy something. And just to give you compliments, you showed up. I was impressed by your attires. You really put in effort in how you showed up today. I think that's it from me. Congratulations in advance to the team that will win, and congratulations to all of you just for taking part in the challenge.
Okay, let me start by congratulating all the participants. All of you displayed a great work. Whatever display showed that it was really a couple of brains behind it, putting all that together, and the decision and the step you all took to participate in this, because I'm very sure you are not the few who are doing this course. You are many, but taking that bold step, it's something that I really want to appreciate. I'm really admiring you guys, and I'm like, I wish the time I was like you, I'd also participated in a challenge like this. I think I would be very, very far. Don't take this for granted. it is really a bold step. The financial industry is so dynamic. Today, it's something different. 10 years to come, it's something different, meaning it's a learning process. It's a work in progress. Whatever research you did, whatever knowledge you have, you keep building it more and more. My biggest encouragement with this is you don't stop at this. Continue with doing more research now that you have already started. All of us here are winners. We all participated. And I love the confidence in the presentation. We all displayed that we were sure of what we were talking about. We all had knowledge with great insights and paying attention to a lot of details that came out from all the groups. It's something that it's so much important, especially when you're making a presentation to an investor. Somebody will want to put in money where even the stakeholders themselves, they're really confident of their daily works. With this, I can say thank you so much for your participations.
Just like my fellow speakers, I just want to thank everyone who has participated in this challenge. I remember the first time I decided to take on a CFA, I was a technical engineer during COVID, sleep during COVID at Coca-Cola. But I would say it's something that I don't regret. Starting up a CFA, it's an industry that is still growing. Like the world of finance is always changing. Like when you look at the alternative investments coming up and like the way everything are changing. Like today we're discussing about, like when the presenters were talking, all of us, our questions were like, now I'm going to send money to another country. So, but how am I protected? You see, it's always just changing. So I just wanted to encourage everyone who has participated in this to just continue the journey, regardless of who the winner is, but just consider yourself as a winner, like my fellows have said, and there are better things ahead. Yeah, thank you.
Thank you very much, our judges. So as we tally up the final scores, I would like to invite Simon on stage. Simon is a very seasoned charter holder. He doesn't want me to talk so much about him, and I hope he'll tell us a little bit more about himself. But I wouldn't let him go without coming here because I know he has a lot of wisdom to share. So thank you so much, Simon, for honoring the call.
Thank you so much, Ruth, and good afternoon, everyone. I had actually thought that I would somehow sneak into this room and just be somewhere in the background and just try to see some of the good talent that we have, and somehow Ruth managed to fork me out. Anyway, congratulations to all the participants. And I don't know who the finalists are, but congratulations. I just want to wish you all the best. This process that we're undertaking, that you've undertaken today, going through, numbers, reviewing reports, looking at NMB, looking at NMB's competitors, it's a skill that right now looks more like a volunteering skill, but actually a skill that will differentiate you from so many who actually do all these, who have studied like you, but they don't know how to put all this into practice. And investments is unique. No, you can't know whether you're right or wrong until the outcome. So to those that had a buy recommendation, I mean, you're right. Even those who had a sell recommendation, you could be right depending on how the market will be. The most important thing is to know what you're doing, having the conviction in, the research process that you've undertaken, and be willing to learn and keep learning. Also, one thing I want to encourage each of us is keep close to the society, keep close to the CFA society. It's by being close to the CFA society that you'll be able to get your industry mentors, like real industry mentors, not mentors that were helping you through this exercise. Actual industry mentors that can shape you, that can lead you into great career, and that you can learn from. So you keep close to the society, just keep practicing everything that you've been doing. I think what you've done in analyzing NMB is just one side of, a multifaceted sphere. The way you look at a bank is not the same way you look at a manufacturer, it's not the same way you look at an insurance company, it's not the same way you look at a fintech or even any other tech company. So just challenge yourself, go into these fields, push yourself. Right now you know NMB. Can you figure out the whole of NSE? Can you figure out the Johannesburg Securities Exchange? Can you figure out, every company on the continent? Challenge yourself. As they're still telling, because I'm seeing them still telling, and since Ruth asked me to speak, I normally don't have many words, but when I talk, sometimes I talk. So anyway, while going through this exercise, watching you guys, I was reminded of a few years ago when I was an analyst also. I used to spend a lot of time at the Capital Markets Authority Resource Center. And this is really long ago, like over 20 years ago. And I would always go to the resource center. It had all these books that, they had a book, if I remember it very well, it used to capture all the companies that are listed on the different stock exchanges across the continent. And for me, it was just the thought of, I can actually know companies that are listed in Nigeria, and I can tell someone about all those companies from what their earnings were like the last 5 years, and just that element of curiosity. I just allowed it to just keep growing and growing and growing, and then studied CFA, and here we are. So I just want to encourage you that don't underestimate this process. Spark that curiosity. Just be someone that, at my workplace, I work with Cornerstone Asset Managers. And one of the things, and even throughout my time as an analyst, one of the things I've always told people that I work with is just try to know more than I do. In other words, if I can spend a lot of time, just reading something and I just follow it down the rabbit hole, you should be able to do it more than me. And if you can do it, then you will be relevant in the industry. People will be able to count on you to give them up-to-date research. People will be able to count on you to give them quality and valid opinions. So with those few words, ladies and gentlemen, you looked very intelligent. You are very articulate in how you are bringing out your points. Each of you, there's a period when I had to step out, but for the most part, I think I watched team A, B, C, D, E. I think I just missed the team after E. But the rest, you guys were spot on. Just hone that skill, nurture it. And even if you've not been a champion today, just assume that that guy who has, or that group that has been champions, are people that, challenge accepted. Just keep them in your viewpoint every year. Find out where are those guys. And then on your own, just consider it as challenge accepted. You can always generate and produce better research. I was hoping that I can get to meet some of you here but I need to run away. If any of you guys has free time, please pass by Naguru at Cornerstone offices. We can always have a very, very good catch up. But otherwise, all the best. And judges, I think you did exceptionally well. I don't know who you've appointed, who has won, but I know there's no bias. I know each of them. And congratulations. Ruth, well done for the successive, challenges, and keep it up. So this is when I hand over the mic.
Thank you so much, Simon. I was hoping I would keep you here for another 10 minutes to hand over the awards to the teams. If you would borrow us the 10 minutes. Thank you so much. So as the judges look at the final scores and we wait for their approval to announce,
Good afternoon once again. So as judges, we only see faces when you come in front. We see you, we don't know what university you're from, and that's basically for us not to get biased. The only thing we are judging you on is your presentation when you come in front of us and you present. As already said, all of you did an exceptional job. However, there is always a winner. And I'm now just finding out which university that is because I really didn't know. So the winner for this year's research challenge is from Makerere University Business School, Team B. Please. Team B, it was very close, by the way, between, I think, Team B and Team A. You're both from Makerere University Business School. It was not an easy decision to make. So Team A, don't feel discouraged. You did very well. It's just very small points. I think it's like 1 point, really. But so I don't want you to feel discouraged. You've done exceptionally well. Team B, please come down and receive your placards. Is the faculty advisor for Team B around? Please come as well. And the mentor as well.
All right, congratulations, Makerere University Business School Team B. These are the champions of the CFA Institute Research Challenge 2025-2026 Uganda Local Finals. So we are wishing you the best in the next round. This is not the end. This is the beginning of the next chapter. This team here will be representing us as Uganda Local Finals at the EMEA Sub-Regionals in about 2 weeks. So this is just another door opening to greater challenges, but greater opportunities as well. As a token of appreciation for your hard work and dedication, we have a few tokens that we'd like to extend to you, among which are some plaques, certificates, and a check. The check will be cashed out at a convenient time. We shall reach out to the team leader, and these funds will be sent to an account that you will advise, and this will be used as per your discretion. And fortunately for you, you have Simon right there who can advise you on how best you should invest your money. So without saying so much, I'll just read out the names on the certificates for the winning team, but we have certificates as tokens of recognition of hard work for each member, and we will invite team leaders for each group to come and pick the certificates. All right, so I'll just start by congratulating the industry mentor of Makerere University, Business School Team B, Mr. Edgar Mujenyi, on the great work as an outstanding industry mentor. Congratulations.
Congratulations.
Edgar, please hold on. We also have a plaque for you. Would also like to congratulate Dr. Barbara Wanyana on your outstanding service as a faculty advisor to the winning team. Congratulations. Congratulations to the following members of the winning team. Agi Baseke, congratulations to you, Emeline Amanige. Congratulations to Jerome Cheyune. Last but not least, congratulations to you, Elizabeth Namudu Mugera. And we also have a token of appreciation to your university. Maybe this will go to the department. All right, we invite the judges. Oh, one more very important token here. So I think the whole team should come and take a pose of a photo with the judges as well. Maybe just move in front a bit. Judges. All right, thank you so much, winning team. You may take your seats. I would like to also invite Makerere University Business School Team C to come and receive your certificates. And congratulations once again. So maybe we can distribute. Do you want me to read them out? This is the industry mentor.
Yeah. So for Team C, congratulations. And we're all winners in this. It's amazing how MOOBS has such amazing talent. I think Mr. Mwesigwa, you're the industry mentor, right? Faculty mentor.
Eastport University Team A. Congratulations. I'd like to also invite the faculty advisor and industry mentor if here, please. Last but not least, I would like to invite Makerere University Business School Team A. Please come for your certificates. Team A, please stay back so that we can take one large group photo. Everyone, please come lower. Guide us on. Would like to have the banners at the back. Thank you so much. Please take a few moments to network. We have lunch waiting for us before we can depart.